Good morning, students. So today we are here. I'm CA Shilpa Agrawal, and I'm there today and we'll be learning today Indian Accounting Standard 23 borrowing cost. Students, before we start, some disturbances there. Just a minute. Dilip, can you unmute yourself? Yeah, okay. Thank you. So, students, welcome. Leela, Akshay, Dilip, Vibhu, Naman, Sanjay. Good morning, everybody. And it is really good that you all are very disciplined and joined the class live and you're ready for the understanding of new standard. Okay. So, today we are having India's 23 borrowing cost. See, students, you are at final level. So at intermediate level also you have a standard accounting standard that is on borrowing cost, that is AS 16. This standard Ind AS 23 borrowing cost is more or less similar to that. In fact, we can say AS 16 has been somewhere borrowed from Ind AS 23, or we can say IAS 23, International Accounting Standard 23. So concepts are more or less same, but yes, because it is Indian accounting standard which is in correspondence to your international accounting standards, so your disclosures will be more. There may be more some adjustments which were not there in accounting standard but are there in your Indian accounting standard. So assuming that you are studying Indian accounting standards for the first time, or you can, shall I say, that you are studying this standard for the first time, I'll be starting. And I want everybody to be participative. Be ready with your questions, with your open mind. What, why, when, why not? In fact, your question should also arise in your mind. Why not this is happening? Why this is happening? When it will happen? Where to happen? What will be the accounting entry? I expect students that they will ask me in between whenever I am explaining any concept and they feel that how it is to be done with please support with the help of journal entries. So I'll be there to guide you because journal entries are the best way to understand the concepts. Okay. So students, let us first start with the topic, the title of the standard, which is borrowing cost. If we see, there are two words in this standard. One is borrowing and another is cost. Okay. So students, let me first tell you what does we mean by borrowing. As we all know, we have five elements in balance sheet or in your financial statements. In fact, we have five elements in our financial statement, three for balance sheet and two for your profit and loss. What are for three elements for financial statements or balance sheet? One is asset, another is liability, and third is equity. For your profit and loss, one is income and one is expense. So there are two words. One is borrowing. Borrowing is the element relating to which element does borrowing relate? I'm asking everybody, students, I want answer. Either you can give it on chat box or you can unmute yourself and tell me.
It's a liability.
Yes, it is a liability. And what does we mean by cost? What does we mean
Cost is an expense.
cost and expense? So we are having two elements in the standard. One is a liability and one is expense. But it indirectly it appears that for borrowing cost, in other words, we can say it is interest expense. And it is when it is interest, it is an expense. What we have studied from class 11, 12, that any interest on any loan or any borrowing is charged to profit and loss. Then what is the purpose of having this standard? Why are we having a separate standard on borrowing cost? Any idea or anybody who can say, because you all are at final level, you have studied same standard or similar standard at intermediate level, why we are having a separate standard on borrowing cost?
For uniformity of in presentation of financial statement.
And anything else? To determine which cost to capitalize and which to expense out. Okay, Chitra, good. Yes. See, in general, or the general understanding for borrowing cost or for any interest is that it is expensed out. But there are certain situations when we are not expensing it. We are not charging to profit and loss. We have to capitalize it. And that is the reason there's a separate standard on this where we'll understand, we'll study that when it is capitalized and when it is not to be capitalized. First thing, when it is to be capitalized, then how to be capitalized. So we'll be having, just a minute, huh? Yeah. So we'll be having first part, when to be capitalized, what figure is to be capitalized. As we all know, every accounting standard deals with four particular concepts: recognition, measurement, presentation, and disclosure. So the first part is your recognition, when to be capitalized. Measurement, how much amount to be capitalized, where to be capitalized, till what period we have to capitalize, how to calculate, and then how to present it, and at the end a disclosure. Since at final level, where what we are dealing for examination purposes is mainly till presentation, disclosure aspects are relevant to you but are not much tested in examination. Okay, but for your complete understanding of the standard, we'll be discussing the disclosures as well. Okay, fine. So first thing we'll be discussing what is the key definition. There are two important key definitions which we'll be studying for this standard. Then how to capitalize, when to capitalize, that is recognition of borrowing cost. That commencement of capitalization is also the period from when it is to be capitalized, till what period we have to capitalize, when to stop, when to complete, when to, instead of capitalizing, when to expense out. This, the entire standard will go in this flow. Okay. So first definition, which will be the core principle of this standard, is that any interest or other cost incurred for borrowing of funds. See, borrowing of funds, after borrowing, we incur expense, which is called as interest. But sometimes we have some expenses which we incur at the time of borrowing the funds. And that expense is also, that expense also forms part of borrowing cost. So interest and other costs. So there are two parts, interest and other cost. Okay. Incurred for borrowing of funds form part of the cost of debt asset if they are directly attributable. This word is very important, if they are directly attributable. If they are directly attributable to the three important words: acquisition, construction, and production. If an asset is not acquired, if an asset is simply you purchased and then started using it, then it won't be considered as a qualifying asset. So we'll be discussing another definition, that is qualifying asset. First, we are just going through the core principle. Core principles is basic, since the standard says borrowing cost. So core principle says any interest and other costs incurred for borrowing of funds. Every expense related to borrowing will be considered here, form part of the cost of that asset, are directly attributable to the acquisition, construction, and production of qualifying asset. So another important definition which we'll be studying is what is qualifying asset. First is what is borrowing cost, and another is what is qualifying asset. And we have other borrowing costs also which are recognized as an expense. So this particular standard deals with two parts, where what to capitalize and what to expense out. Okay. Now, before starting, first understand what comes under Ind AS 23. What will be considered under Ind AS 23, which we are going to capitalize. In general, Ind AS interest are expense out. We'll be dealing with what to be capitalized. That is the reason we have a separate standard. The standard does not deal with the actual or imputed cost of equity, including preferred capital not classified as liability. This is very important, students. Actual or imputed cost. What does we mean by imputed cost on preferred capital? Preferred capital means preferential capital. Okay. What do we mean by imputed cost? See, any cost which is not an expense, we think that it is an expense. Impute means we are just understanding ki if this amount was not utilized for this particular purpose, then I would have earned this much interest, or I would have not paid this much of interest. That is imputed. And here with cost of equity, see, if I'm having any preference shares, that is my capital, and I'm using the fund raised from those capital in the acquisition, construction, or production of any qualifying asset, we believe that instead of using my own fund, if I have borrowed, I would have definitely incurred any interest. In case I'm not borrowing and I'm using my own fund, then I have to pay the dividend to the shareholders. So that dividend is also my cost, and that dividend should be considered here as an borrowing cost. But no, it is imputed cost. Why it is imputed cost? Because dividend is not an expense, it is appropriation of profit. Okay, so it will be an imputed cost on equity share capital. Similarly for preference share also. As you all know, in Ind AS 32, as per your Indian Accounting Standard 32, that is on financial instrument presentation, preference shares may be your capital also, preference shares may be your liability also. In case preference shares is your liability, any interest or any dividend which you are paying on those preference shares, that will be considered as your borrowing cost if it is used for qualifying asset. However, if your preference share is in the nature of capital, then the amount which is paid on that preference share capital is a dividend, not interest. And that interest will not be considered as borrowing cost, it will be considered as imputed cost. And that's why it will not be forming the part of borrowing cost. Hope I am very clear with this. Any doubt for this particular statement? Including preferred capital not classified as liability?
No doubt, ma'am. No doubt.
Okay.
Ma'am, it's clear, ma'am. Thank you.
Okay. Then we are moving with the examples. Already I have explained you dividend on equity shares, cost of issuance of equity shares, or cost of preference share capital, because these are all equity element. They are not they are equity instruments. They are not your liability. That's why any cost incurred on this will not form part of your borrowing cost, and that's why it is out of the scope of Ind AS 23. Let's have a scenario. I'm just skipping this scenario because I've already explained you. Moving to second part, the standard does not deal with borrowing costs directly attributable to the acquisition, construction or production of qualifying assets that are measured at fair value. See, whenever we measure anything at fair value, your value, that particular value will appear in your balance sheet. Okay, and it is an asset, so the value will appear in your balance sheet. If it is measured at fair value, and beyond that fair value, if you are recognizing anything, suppose fair value is say 1 lakh. Okay. Okay. Fair value is 1 lakh. And after 1 lakh, if I'm adding 10,000 rupees as my finance cost or as my borrowing cost, which I'm capitalizing it, but because your fair value is 1 lakh, so over and above whatever is there, it will not be recognized. So any borrowing cost directly attributable to the acquisition, construction, or production of a qualifying asset that is measured at fair value will not be considered. It means any borrowing cost on those qualifying assets will be charged to profit and loss account. Okay, the reason I'm giving one more example. Your cost is 10 lakh rupees. Okay, and now just sorry. Okay, your cost is 10 lakh. Suppose your borrowing cost, which you're trying to capitalize, is 1 lakh. Okay, you have total cost of 11 lakh. Now your asset is measured at 12 lakh. Fair value is your 12 lakh. Cost was 10 lakh. Now in that case, you'll be showing your this for asset at balance in your balance sheet at rupees 12 lakh. So difference of 11 and 12 is going to be charged to P&L as a gain on fair value measurement. So you'll be having P&L you'll be having gain on fair value measurement. Okay, of 1 lakh. Now suppose if you do not capitalize it, and you simply put it in your charge it in your P&L, what will happen? Your asset will value at 12 lakh only because it is a measured at fair value. In such a situation, what you'll be having? P&L may you'll be having gain of 2 lakh, 10 lakh or 2 lakh a difference, and borrowing cost of 1 lakh will be less borrowing of cost. This is gain and this is cost. So 1 lakh. So net impact will be 1 lakh. So even if you are having a borrowing cost which is to be capitalized, your asset is to be measured at fair value. So net impact will be same. That is why there is no purpose of capitalizing borrowing cost to the assets or qualifying assets which are measured at fair value. Fine. Now let me move on to eraser. So any qualifying asset which is measured at fair value is out of the scope of Ind AS 23. We move on to next part. Example, biological asset. If the assets are held, this is the example. We can have any biological assets which are held under fair value model. All changes going to start a statement of profit and loss. Even your capitalization of borrowing cost, that will indirectly move to P&L. So there is no purpose of capitalizing it. Inventories that are manufactured or otherwise produced in large quantities on a repetitive basis. This is again, what is the reason why we are not capitalizing borrowing costs on these? The only reason is the difficulty in measurement. As and when you are having an inventory which is for qualifying nature, as you try to capitalize, it may be that that inventory is ready for sale and it is immediately sold out. And because it is in a repetitive nature, there will be a challenge in computing borrowing costs and capitalizing. That is the reason, for ease of counting, this has also been exempted out, that we are not required to capitalize borrowing costs on such type of inventories which are in large quantities. Production is in large quantities and on a repetitive basis. Difficulty both in allocating borrowing cost and monitoring those borrowing costs until the inventories are sold, because they are in such a large quantity and selling out is in small quantities. Okay, this was example. Now we will move on to the definition of borrowing cost. Borrowing cost have three elements. One is interest expense calculated using the effective interest method as described in Ind AS 109. Ind AS 109 is on financial instrument, which you'll be studying later in your virtual classes. Right now, any interest expense sometimes is directly calculated based on the percentage which is mentioned in your borrowings. Sometimes it is the capitalization rate which is used. Sometimes it is effective rate when it comes to financial instrument or financial liability. At times we have to use effective interest rate. That is also interest calculated based on that effective interest rate is also one of the constituent of your this borrowing cost. Interest in respect of lease liability. We have standard Ind AS 116 on leases. There we come out with right of use asset and also your financial liability. So that financial liability, lease liability, any interest paid on that lease liability, if that lease asset is used in the construction, production or acquisition of your qualifying asset, then that any interest charged on that lease liability will also form part of your borrowing cost. Okay. Third is exchange difference arising from foreign currency borrowings. Exchange difference, this will be studying in detail when exchange differences capitalized. First, let us understand interest in respect of lease liability. There's an example I would like to give. Suppose we are constructing a building. For construction of building, we have taken a crane on lease. When we take a crane on lease, we are paying lease payments. And for those lease payments, for example, if we have taken a crane on lease for 5 years, so we have a present value of that crane, whatever lease payments we are going to incur over the 5-year period, we calculate a present value. And on that present value, we do unwinding up in the form of finance cost. That is lease, because it becomes a lease liability. So that finance cost will be capitalized for construction of building because the crane is used for construction of building. That is, building will take substantial period of time, so it is a qualifying asset. So the crane is used for that. So whatever lease liability we are paying, and on that lease liability, whatever finance cost we are paying will considered as borrowing cost. Okay. In case students, you feel that you need another example to explain, please let me know. Or you want anything to be explained further with the help of amount, you can let me know that also. Okay. Exchange differences arising from foreign currency borrowings. In short, let me explain you, then I'll be explaining it in detail also in coming up slides. Sometimes it happens just to save the amount of interest over the period. We, instead of borrowing in local currency, we borrow funds from international bodies or from any international organizations, entities. In that case, definitely your borrowings will also be in foreign currency. In such a situation, maybe that interest rate is less, but we are having some exchange loss also. So portion of exchange loss, which could have been saved out if we have taken any interest, which would have not been saved out in case we have taken borrowings in local currency. That particular portion is considered as borrowing cost. We'll understand later in this part, but that is the reason we consider some of the exchange differences also as borrowing costs, because borrowings are taken even in the foreign currency. Okay. Okay, let us understand this with the help of example. This is very important concept, and somewhere you have to be very alert and conscious when understanding this particular concept. Okay, an entity can borrow funds in its function currency at 12%. So if local currency में buy किया होता, हमने borrow किया होता, तो 12% का हमें interest लग रहा होता. However, the entity had borrowed $1,000 at the rate of 4% on 1st April 2020. And at that time, your exchange rate was $1 is equal to rupees 40. Interest is payable on 31st March X2 after an year. Okay. Now on 31st March X2, exchange rate is $1 is equal to rupees 50. The loan is not due for payment. Now we have to understand how to deal with this. Suppose we have bought this $1,000. What is the functional value, Indian term loan amount of this borrowing?
40,000. 1,000 into 40, 43.
Very good. Very good. 40,000. Now this 40,000 was our requirement. Instead of borrowing in dollars, if I have taken in Indian currency,
Functional currency 12% interest rate, then we will have to pay.
Very good. Very good. Who is there? Who is speaking? Very good. Okay. 40,000. Let me just open the participant list. Then only I'll be able to. Okay. Chat was also there. To determine which cost liability. Chitra was asking something. Sorry, Chitra, I missed your chat. To determine which cost to capitalize and which expense. Okay, that you gave the answer earlier. Okay. And Mohit replied, no, ma'am, no doubt. Okay, good. I'll be just having this.
48.
No, I'm there. Just a minute, huh? Okay. I just want to understand who is speaking. That's why I'm opening this chat.
It's me, ma'am, Vibhu Pandey.
Okay, Bibhu. Okay. Okay. So Bibhu, you are right. 4,000 and 40,000 into 12%. 4,800 would have been a cost. Just a minute. 40,000 into 12%. Actual interest cost would have been 4,800 in case we have borrowed in Indian currency. Now, since we have borrowed in dollars, so 1,000 into 4%, we would have got amount of $40, and $40 because it is an expense. I don't know what is going on. Sorry, huh? Maybe my fingers are touching the screen. 4,000 into 4%. Sorry. It is 1,000. 1,000 into 4%, 40 rupees.
40
and
rupees.
because we are paying this interest is an expense. It is always measured at closing rate. And the closing rate is your rupees?
50.
So
50 rupees.
So 50 into 40, your interest dollar value, it becomes 2,000. So you are paying interest expense of 2000 rupees in Indian currency. However, if you have borrowed the entire loan amount in Indian value or in rupees, you would have paid 4800. So there is a scope of 2800 to capitalize as borrowing cost. But will it entire 2800 is to be capitalized? That we have to check. We cannot simply take 2800 and charge it to P&L, including the borrowing cost. No. First, we see what is the exchange loss. Now, earlier measurement was 40 when we borrowed the fund. Now closing rate is 50. So 10 rupees per dollar is your exchange loss. For $1,000, your exchange loss comes to 10,000, which is much more than your exchange loss. Sorry, exchange loss is your 10,000 and the saving in your borrowing cost.
2800.
So there is a scope of capitalizing entire 2800 because it is less than the exchange loss. So this will also form of borrowing cost. This is your borrowing cost, actual borrowing cost. This is the borrowing cost on account of exchange difference. Okay. So now out of this 10,000 loss, we'll be having 2800 capitalized value will be capitalized and remaining 7200 exchange loss will be charged to
P&L.
as borrowing cost. Yes. In case this exchange loss was less than 2800, we'll be seeing in the next example. What will be the journal entry before moving to the next part? Changing some of the information in the scenario before moving. What would be the journal entry? For example, we have a qualifying asset for which we have to capitalize this. What would be the journal entry at the beginning and at the end? I want to understand this, students. First, when we are borrowing the funds for capitalizing the asset, for qualifying asset, suppose we have an asset of, say, we have an asset of 1 lakh rupees. What would be the entry at the time of taking the borrowing? And that entire borrowing is used for your construction of the asset. Simple, asset account DR. Because asset is under construction, it will be WIP.
Yes, ma'am. We will debit the asset account and credit to bank the borrowing account 1000 into 40.
Very good. Very, very good. This will be your first entry, okay? 40,000 से आपकी हो गई. Now, what would be your entry on 31st March?
31st March, we will again debit to the asset account, credit to the borrowing cost to the extent 2,800.
And what about your exchange loss?
Exchange loss,
For that?
yeah, we will credit to 7,200 to profit and loss account.
Yes, definitely. So I want answer next time from everybody to participate and give me the journal entry. So you're on 31st March 20x2, your entry would have been asset. Again, because we are assuming it is still qualifying asset to WIP, the amount which we calculated was 4800. Okay. 2, your asset value 1 will go to borrowing. What will be 2000 rupees? Assuming that 2000 is not paid, it is accumulated. Otherwise, we can put cash also for this, okay? Or bank also. 2 P&L for your 2800. No, sorry. 10,000. Your exchange losses here will be 7200. And it will exchange loss 7200, 2000 tomorrow. Just a minute. Sorry, I just got. Just a minute. Entry will be your exchange loss 7200. Assets capitalization will be in two parts, 2000 actual cost and 2800 your this. So total 4800 to anybody. Exchange loss is on what? Borrowing. Your borrowing has increased. With one value of 10,000, your borrowing is where borrowing value has increased by 10,000. And your interest, if you are assuming that is paid out, then 2,000 rupees. Please check the entry is telling or not. Yeah, 12,000. Is it clear to everybody? Exchange loss of 7,200 charged to P&L. Asset capitalized by 4,800, which includes 2,000 actual expense which you are paying it in the form of cash, and 2,800 which you have taken out from exchange loss and had capitalized it. And because there was borrowing, your now closing balance of the borrowing is not 40,000 rupees in Indian currency, it is now 50,000. So 10,000 enhancement in your borrowing. Okay. Moving to the next example. Yeah. Earlier, we were having exchange loss of 10,000. Suppose exchange loss is less than 10,000. What would be the situation? Again, we are having here 40,000 borrowing, जिसपे आपने अब पेमेंट किया होता, अगर इंडियन करेंसी में बाय किया होता for 12%, 4,800, same value which is given there. But if you are buying in dollars, then you have to pay interest of rupees $40, but your exchange rate on 31st March is 44. So your value would come as 1,760 rupees. Okay, so you have a scope of how much value? 3,040, which you can take it out from exchange loss and capitalize it. Is it okay? But our exchange, what is the exchange loss? First, we have to find out the exchange loss. Exchange loss is of 4 rupees, 40 rupees earlier and 4 rupees. So exchange loss is of 44 minus 40 into $1,000. So your exchange loss comes to rupees 4,000. So we can now take 4,000. Out of 4,000, we can take this value. Am I right?
Yes, ma'am.
Okay. And remaining will charge to P&L. Suppose further, if we say our exchange rate is instead of 44, it is 41 rupees. What would have been case? In that case, only your exchange loss would be 1,000 only. In such a situation, we cannot capitalize this entire 3,040. What we will do, we'll limit or restrict our exchange loss to amount this much only to be capitalized. So your amount which will be capitalized will be 1,760 plus 1,000. In case your borrowing exchange rate is 41, in such a situation, you cannot capitalize the difference of actual borrowing and the borrowing. In case you have taken in Indian currency, the difference of that will not be capitalized in entirety. We have to restrict that amount to the extent of the exchange loss. Is it clear? Is it clear?
Yes, ma'am. We have to restrict to the extent of the savings of that.
Yeah. Whatever exchange loss is there till to that.
If we have taken the functional value at 41, then the above amount of interest will also change. 1,760.
Definitely. Yeah. You are right. It will be 41 rupees. We have to calculate it from 41 value. Good. So, sorry, in such a situation. Oh, sorry, just a minute. Just a minute, beta. I did something wrong. Just a minute, beta. Just a minute. Just a minute. I missed my PPT. Let me see. Okay, students, somehow I missed my PPT. Let me just study with the. I'm just by the time I'm taking my. Just a minute, huh?
Ma'am, you can see in the recently opened file, ma'am.
No, it is there. The system works in a different manner, beta. Just a minute. Can you see the screen, na? PPT is open to you, na?
Yes, ma'am. We can able to see that exchange difference to be included in the borrowing cost. That's clear.
Thank you. In case our borrowing exchange reduces to 41, definitely this amount will also change. Okay, amount figure will also change. Your value of difference between actual borrowing, difference of your interest rate in case of foreign currency borrowing and the difference of exchange loss in your foreign currency will increase. This figure will increase because 40 into 41 it will come as 1640. यहाँ पे 1760 के वैल्यू it will be 1640, so difference इन दोनों का जो होगा वो change हो जाएगा and that will increase. The lower the exchange rate, your difference of foreign exchange which we can capitalize, that scope value will increase. However, exchange loss will be less, so we cannot capitalize the entire value. Okay, moving to the next slide. This I have already explained to you. Now, one more important part in this exchange difference required is the adjustment amount should be equivalent to the exchange loss. This we have already seen. However, in case we have made part payment, अभी तक हमने जितना भी example देखा, whatever examples which we have seen till now, is that we are taking an assumption that no payment of principal amount has been done till date. Okay, it may happen that you have a principal payment, you have part pay principal amount to be repaid. In such a situation, what will be the case we have to see? And one more case we have to see is that where we are having exchange loss which is beyond a year. For example, right now we have seen for 20x1 x2. Okay, in case you move on to second year 20x2 x3, there are two situations. Entire amount is outstanding, entire borrowing is outstanding. I'm not well versed with this pen, so writing is not coming at all. Entire is outstanding, and another is some of the borrowing has been repaid. What would be the situation? First, we are seeing when entire borrowing is outstanding. First year example, you're already having 4,800 you have capitalized in the first year, which was 2,000 actual, and 2,800 was your cost, which you have taken out from the exchange loss. This was in the year 20x1 x2, when exchange rate was 31st March x2 को आपका कितना था 50 rupees. In such a scenario आपका ये बना था. Now in year 2, that is on 31st x3, your exchange rate is 44 rupees. If your exchange rate is 44 rupees, this year what you're having a loss of only, you're having a gain, because now your borrowing was standing at rupees 50. 50,000 पे आपकी borrowing stand कर रही थी.
Yes, ma'am.
हाँ, अब आपकी वो 44 हो गई है, यानी कि 44,000 की हो गई है. तो what you are having is an exchange
loss.
You're having an exchange gain. No?
Exchange of 6,000 rupees.
Yes, 6,000 is the exchange gain. In such a situation, जब आपका लॉस ही नहीं है तो लॉस का कुछ पोर्शन आप कैपिटलाइज करते थे. When there is no loss, will we capitalize amount? Any exchange difference? Yes, we'll be doing it. What the rule is that in case in particular year you are not having any loss but you are having exchange gain, still you have to make an adjustment or to the borrowing cost with respect to exchange loss. How? Let us see that. Second year में we are not taking this 400 into consideration right now. We are assuming that we are having entire borrowing with us. Okay. In second year में भी आपका 1000 पर 4% से 1000 पे 4% से आपकी you got 40 rupees और जिसपे आपने पे करना था आपका exchange rate क्या है आपका now 44 rupees. Okay. On 31st March 2003 you get a value of rupee 1760 as an actual borrowing cost which you are paying on foreign currency borrowing. ठीक है. Now you have an additional amount of rupees. You have an exchange loss of 6,000. So what you will be doing is that 1,007. Sorry. Just a minute. Huh? Okay. Now in that case, what you will be doing is that you will be taking up entire loss of rupees 2,800 because it was done in your 20x2. To that extent, 2,800, we have to see कि whatever exchange loss है that we can take it back. Cumulatively, आपके पास यहाँ पर 1920. Just a minute, beta. Sorry, huh? Sorry for the disturbance. I'm not well versed with this pen, na? Taking me some problem. Eraser. Something is going on. Okay. With regard to exchange difference required to be treated as borrowing cost, the realized or unrealized gain to the extent of unrealized exchange loss previously recognized as an adjustment should also be recognized as an adjustment to interest. So we move on back to this entire amount. 400 in the year 31st March 20x3, we have calculated our actual exchange borrowing cost on foreign currency as 1760. We do not have any exchange loss. We are having exchange gain. Still, we see that last year what we capitalized was to the extent of 2,800. Okay. So this year, for this 2,800, we'll see that whatever exchange is from this 6,000, we can take it out back. Take it back means earlier what we capitalized was 4,800. This year we'll be capitalizing 1,760 and exchange gain to the extent of 1,760. We can take it back. We cannot, borrowing cost can never be in negative. Okay, borrowing cost can never be negative. So in such a situation, whatever amount to the extent of the borrowing cost which we are this year, we will not be capitalized anything in case of instead rather than 1760. So 4,800 लास्ट ईयर आपने किया था, 1760 जो आप एक्चुअल कर रहे हैं, पर एक्सचेंज लॉस नहीं था, पर एक्सचेंज गेन टू द एक्सटेंट ऑफ 1760 जो 2,800 आपने किया था उसमें से आपका एक्सचेंज लॉस निकालिए पहले आप प्लीज जस्ट टेल मी द फिगर. Can I get the figure, everybody? Are we having a figure of students? Just let me tell me the page now because of pen na, I have lost my page figure also. What was there? We were moving in which example? Okay, let me start it again. Now I'm having some problem with this pen na. let me start with this example again, and sorry for disturbance. What the problem is going on? Okay, let me start with this part. Otherwise, I won't be able to move it on. It is. कुछ चल नहीं रहा पेन ये. It's not working. See.
एक बार
देखो.
म्यूट कर रखा है.
नहीं, म्यूट कर दो. Just a minute, kids, na? Just a minute.
Ma'am, small request, ma'am. Just to move on, ma'am. We will understand. Any question we will ask you, ma'am. Just we understood whatever your concept is.
No, that is not the problem that I'm not able to explain. The problem is that pen is not working. Pen and eraser is not working. That is the reason we are waiting for things to wait. Na? And whatever I wanted to explain with the help of pen and eraser, that is not working. That is the reason. Okay. But still, if you want, I can start my explanation without pen. Just let me move, and when the technical person will come, we'll move on to the next slide, and we'll come back to this example. Okay?
Yes, ma'am. Perfect. Thank you.
Okay. So right now we have to discuss what is qualifying asset. Qualifying asset has three parts in this. What we include. Any asset which is ready for use will not be considered as qualifying asset because it is not taking any substantial period of time for its construction, production, or acquisition. Okay. So what is important we have to look in this cost is borrowing cost is incurred, and borrowing cost is incurred which is directly attributable and is related to the acquisition, production, or your construction of qualifying asset. So if an asset is not a qualifying asset, you will not be capitalizing any interest incurred related to that asset, any interest on the borrowings related to that particular asset. So for what is considered as qualifying asset is any item which takes substantial period of time. So substantial period of time means this has not been explained in Indian accounting standard. In accounting standard, it has been explained that substantial period of time should be 12 months or more. But in Indian accounting standard, there is no such explanation given here. So what is considered as substantial period of time depends on the management of the entity. Okay, so it may be less than 12 months also, it may be 6 months also, it may be 8 months, depending on the operations of the entity. So in examination, for examination purpose, any period which is given, you may consider as substantial period because your testing will be on the understanding of the provisions of Ind AS 23. So even if it is given 6 months, if it is given 8 months, if it is given 24 months, we'll consider it as substantial period if nothing is mentioned. It will be a presumption that whatever the period is taken has been taken for construction or production of that particular asset, it will be considered as substantial period. Fine. Okay. Now what comes under your qualifying asset, or what are the assets which take substantial period of time are inventories. Inventories in case of you're having production of wine, or you're having rice which takes time to mature or to enhance the value. Those inventories are considered as qualifying asset. Manufacturing power, big assets like property, plant and equipment, your building, your factories, your any asset which takes lot period of time in construction, considerable period of time in your construction, that will also considered as your qualifying asset. Basically, where construction is involved. Okay, for a builder, it is your assets, flats, units. For your power entity, which is in, for your suppose electricity generation entities are there. So the factory which they are building up, with the power generation facilities, they are all considered as qualifying assets because they take substantial period of time for their construction. Okay, and what is excluded from qualifying asset is asset ready for the intended use or sale. Means as and when you acquire, you are ready to sell it out. For example, all consumable goods inventories which are there, which you buy as from the wholesale person, and you are ready to sell it out. So they do not need further any activity to incur on them to make it at a sellable position. So they'll not be considered as qualifying asset. Similarly, financial assets and inventories that are manufactured or otherwise produced over a short period of time. Short period of time, and they are, means simple, you buy a sack of goods, sack of say cashew nuts, and you're packing it in small packets and selling it out. They take very short period to make it as a sellable position. So they won't be considered as qualifying asset. Okay. So examples of qualifying asset, this we have already discussed. Financial assets and inventories that are manufactured or otherwise over a short period of time will not be considered as qualifying assets. Assets that are ready for intended use. You are buying in a position which is already ready for use and you're selling it out. They will also not be, or you are using it out. It may be that you bought a car and you start driving it. So that car will not be considered as qualifying asset. Okay. So we have some example in our study material. One illustration is a company deals in production of dairy products. It prepares and sells various milk products like ghee, butter, and cheese. The company borrowed funds from bank for manufacturing operation. The cheese takes substantial longer period to get ready for sale. So state whether the borrowing costs incurred to finance the production of inventories that have a long period we capitalize. Tell me what should be the answer, whether that borrowing cost which is there for process of cheese.
No, ma'am. It is the inventory item, which is production is large basis, also the repetitive nature. It is specifically excluded.
Yes, it will be specifically excluded because these are large quantities may we make the production. However, cheese takes substantial period of time, but still it will be not, there will be a practical difficulty in computing and monitoring it. So it will not considered for capitalization of borrowing cost. Another example, a company is in the process of developing computer software. The asset has been qualified for recognition purpose. However, the development of computer software will take substantial period of time to complete. Let me first tell you, qualifying asset may be your tangible asset, may be intangible asset also. So here, though computer software is an intangible asset, but as per the scenario given, here it will take substantial period of time to complete. So whether it will be any borrowing we have taken for its development, so whatever cost we are incurring on those borrowings, will it be capitalized or not?
Then we will capitalize it, ma'am.
Yes, ma'am. It will be capitalized.
Yeah. And now, is management intention considered when assessing whether an asset is a qualifying asset? I want the answer of this also. If I intend it to use it for any particular asset which will take substantial period of time for construction, then in that situation, the intention of the management is important, because for what purpose they are using. There may be some assets which you buy and are ready for use immediately, but the use of that asset is for another asset, and that another asset will take substantial period of time to get ready for its intended use. In that case, whether any borrowing cost incurred on the borrowing of first asset will be capitalized or not, though first asset was ready for use immediately. So I gave you an example of crane. Crane, I took a crane on lease and that crane is ready for use, but I'm using that crane for building.
For a period of time.
And that building will take substantial period of time to complete its construction. So any cost which I am incurring on crane, that is any finance cost or interest cost which I am incurring on crane, will it be capitalized or not?
Yes, it would be capitalized.
Because
Yes, yes, ma'am.
yes, because the intention of the management is to use it for the construction of building, and building will take substantial period of time, irrespective that crane is immediately used. Okay. So management intention is also important for what purpose they are acquiring the asset and what is the use of that asset. Fine. Okay. Next example, a telecom company has acquired a 3G license. The license could be sold or licensed to a third party. However, management intends to use it to operate a wireless network. Development of the network starts when the license is acquired. Should borrowing cost on the acquisition of 3G license be capitalized until the network is ready for its intended use?
Yes, ma'am.
Yes, again,
Yes,
first
ma'am.
management intends to use it to operate a wireless network, and that wireless network will take substantial period of time to develop. Okay. A real estate company has incurred expenses for the acquisition of permit, allowing the construction of a building. It has also acquired equipment that will be used for construction of various buildings, like what I gave the example for your crane. Similarly, you have incurred incurred expenses for acquisition of permit, and that permit will help in the construction of building. So any borrowing cost you are incurring on the acquisition of the permit and the equipment be capitalized until the construction of the building is complete. Tell me, can borrowing cost on that acquisition of the permit and the equipment be capitalized?
Yes,
Yes.
ma'am.
Yes.
Who is saying no? With respect to equipment, equipment will be used for another construction projects also. See, there are two
You
things.
can capitalize, ma'am.
First part we yes, and second part no. Whatever acquisition cost, borrowing cost we are incurring on acquiring the permit, that will be capitalized because that permit is used for construction of building, and construction of building will take time. With that, we have also acquired equipment that will be used for the construction of various buildings. So when it is used for construction of various buildings, we cannot consider that equipment is for that particular building and which will take substantial period of time. So in that situation, we won't be capitalize it for its that equipment is ready for, which will be considered as equipment ready for use. Just a minute, just a minute, students. Hold on, please. इसको unmute कर दूं. Sorry, students. We'll come back to our portion, what we were discussing. So we have discussed all these. Now we come to the recognition part. Borrowing costs are capitalized when below two conditions are satisfied. Till date, we have understood what is borrowing cost, what is qualifying asset. Now we come to the second aspect of this standard, which is recognition. When to recognize. Borrowing costs are capitalized when two conditions are met. First is, it is probable that it will result in future economic benefits to the entity. When you know that whatever expense, interest, borrowing cost or interest expense you are going to incur, that interest expense is incurred on an asset which will have a future economic benefit. Okay. Second is the cost can be measured reliably. In both the situations, when both the conditions are satisfied, and it is and. So when it is and, when both the conditions are satisfied, we can recognize the borrowing cost. Okay, this is when. And sorry, this is that recognition criteria. Why to capitalize, we'll see later on. Now, borrowing cost eligible for capitalization in case of specific borrowing. How to capitalize, what amount to be capitalized, we are now dealing with that particular portion. Borrowing cost eligible for capitalization, there are two types of borrowings, and your borrowing computation of borrowing costs on two different types of borrowing will be different. First, we'll be discussing on specific borrowings. There are two types of borrowing. One is specific borrowing, another is general borrowing. For specific borrowing, if an entity borrows funds specifically to obtain a qualifying asset, the borrowing costs that are directly related to the qualifying asset can be readily identified because it is a specific borrowing. So, if I am having a specific qualifying asset, and for that specific qualifying asset, we have a specific borrowing, we can relate them. Okay. The borrowing cost eligible for capitalization would be the actual borrowing cost incurred during the period less any investment income on the temporary investment of those borrowing. It may happen that you have taken a borrowing of say 20 lakh rupees, but you are utilizing that 20 lakhs in parts. Okay, so even if you are utilizing that 20 lakhs in parts, your interest expense will start because you have taken the borrowing of 20 lakhs. That 20 lakhs comes to your account, your borrowing calculator will computation will start, and you have to pay the borrowing from the day borrowing cost from the day you have taken the borrowing, the entire amount. So irrespective with the utilization fee of the that borrowing, we have to compute the borrowing cost on the entire specific borrowing, and that will be capitalized. And that is the reason we have a concept of investment income, temporary investment. For example, we have borrowed 20 lakh rupees. Out of 20 lakhs, we have only utilized 5 lakhs in the first month. Remaining 15 lakh was idle with me. So instead of keeping it idle, paying interest on it, we invested that 15 lakhs to some other say fund, and from there we are getting investment income that is interest income, say of 15,000 rupees, and you are incurring 20,000 as cost of interest expense. So ultimately what will happen, you are utilizing only 5 lakh out of 20 lakh. Okay, 15 lakh is ideal, and out of 15 lakh, when you earned, you got investment income of 15,000. Fine. And you are paying total 20 lakh. आप 20,000 rupees. So ultimately आप 5,000 के matching concept में आ गए. You are ultimately what you are doing, 20,000 you are capitalizing, and you are reducing this 20 lakh when capitalizing with investment income. तो 5,000 जो है आपका इससे रिलेटेड अपने आप ही आ जाएगा. ठीक है? Is it correct? But will not show कि नहीं. Even इन केस आपने कोई इन्वेस्टमेंट की ही नहीं, वो आइडियल पड़ा हुआ फंड आपके बैंक में है, आप उस पर इंटरेस्ट पे कर रहे हैं, तो इन दैट स्टेज आपकी मैचिंग कॉन्सेप्ट इस 5 लाख के लिए 20,000 हो जाएगी. Got it? Got my point? In case of specific borrowing, your calculator starts from the day one जहां पे आपकी borrowing शुरू हो जाती है. अभी हम एक आगे और नया एड ऑन कॉन्सेप्ट पढ़ेंगे, commencement of borrowing cost. बट अभी मैं आपको जो बेसिक समझाना चाह रही हूँ, what I want to explain is that कि it is not related to the expenditure, date of expenditure. Specific borrowing relates to your computation of interest expense from the date you are borrowing it. ये अलग बात है कि जहां से कमेंसमेंट होगा उसके पहले का पीरियड भी हम पेनल मानेंगे, वो आगे मैं बता रही हूँ आपको. ठीक है? So with specific borrowing, your actual borrowing cost will be capitalized, reduced by any investment income on the temporary investment. In short, we have this portion. Borrowing cost eligible for capitalization. Notional borrowing cost cannot be capitalized. Notional borrowing cost, again, we have studied earlier also, imputed cost, that will not be capitalized. Any expense we feel कि अगर हमने ये फंड अपना फंड यूज ना करके कहीं और लिया होता, अपना फंड ना करके हमने बोरोविंग की होती या कहीं इन्वेस्ट किया होता तो मेरे को इंटरेस्ट मिलता, तो वो इंटरेस्ट मेरा फोरगो हो गया. सो दैट foregone interest is a notional borrowing cost. No, that will actual word important is actual borrowing cost. That is the reason I have kept it in bold. Actual borrowing cost will be considered in case of specific borrowings. Ind AS 23 limits the amount that can be capitalized to the actual borrowing cost incurred where an entity has no borrowings and uses its own cash resource. So any cost which you have foregone, any income which you have foregone, यानी हम ये सोचें कि प्रॉफिट का ना आना भी लॉस है, तो इनकम का ना आना भी खर्चा है, तो दैट खर्चा हम मान लेंगे. नो, दैट विल नॉट बी कंसिडर्ड एज actual borrowing cost, and that's why it will not be capitalized. Okay. So again, we have an example to compute interest on specific borrowing. So Alpha Limited on 1st April borrowed 30 lakh rupees at the rate of 9% to finance the construction of 2 qualifying assets. Construction started on 1st April. The loan facility was also available on 1st April and was utilized as follows with remaining funds invested temporarily at 7%. So calculate the cost of the asset and the borrowing cost to be capitalized. Everybody, I want you all to be with me. Just a minute. Any chat? It is not moving. पीछे चले जाओ. एक सेकेंड. नहीं, आप मुझे यहाँ पे वो दे दीजिए ना. Okay, everybody, let's start with this. During the period first for the factory building on 1st April, we have only used 5 lakh. Okay. The entire specific borrowing was 30 lakh and specific borrowing for your factory building was 10 lakh and for office building your specific borrowing was 20 lakh. Out of that 10 lakh, only 5 lakh has been used on 1st April. Will we start our borrowing cost only for 5 lakh rupees or for 10 lakh rupees? I want to know from you all, students.
Sir, ma'am, we have to put for 10 lakh rupees, ma'am, because we are borrowing the fund on the first day. Whether we are using or not, we have to pay the interest.
Very good. Very good. Yes. Because it is a specific borrowing, from day one we'll start capitalizing the borrowing cost irrespective of the utilization of borrowing for in parts. Okay. So for your first year, you have taken interest at rate of 9%. So 10 lakh. Into 9%, your interest borrowing will be for rupees 90,000. Okay?
90,000.
Okay, but you have made some investment or remaining funds invested temporarily at 7%. So 7%, how much would we have invested? 5 lakh. So we have already utilized it. So remaining was 5 lakh. 5 lakh
into 7%.
Yes, we get 5 7 are 35,000.
For 6 months.
For 6 months, yes. For 6 months. Not for the entire, for 6 months. So what would be the cost?
17,500.
Okay, 17,500. Sorry for this. 17,500. So the amount which will be capitalized with respect to factory building would be
72,500.
72,500. Now for office building, similarly, same concept will be using. Will be first calculating. देखो ये गली गड़बड़ हो गई थी पिछली बार भी, जब मैंने किया ना, तो ये आ गया. यहाँ से हटा दो, फिर कुछ डिस्कार्ड कर दो, चला गया ना वो. Okay, sorry. So for office building, we'll be doing interest 20 lakh into 9%. What will be the amount?
1,80,000.
1,80,000. But we have made this 10,000 remaining investment temporary investment we have made, for which we'll again have 7% for 6 months.
35,000.
35,000. So what will be capitalized during the on this office building?
145.
1,45,000. Okay, clear? Is it clear, everybody?
Yes, ma'am.
Okay. Next, moving to now general borrowing. General borrowing, you have to be very careful. I have one question which, if time permits, I'll be taking. I'll just see how to cover it in the future class. Okay. Borrowing costs eligible for capitalization in case of general borrowing. General borrowing, we cannot identify like specific borrowings that it relates to this particular assets. We may have many borrowings. An entity may have many borrowings, which is used for many purposes. So in that case, that is considered as general borrowing. Any specific borrowing, for example, I have taken a specific borrowing, and a borrowing I have to repay it after 5 years. But my construction of asset was completed after 2 years. So after 2 years, if I'm still having a specific borrowing, that specific borrowing becomes a general borrowing. So any borrowing till the period, any specific borrowing till the asset is under construction will be considered as specific borrowing. After that, it becomes general borrowing. Similarly, we have some general borrowings also for which we have not defined the purpose. For what purpose we are borrowing it, for what particular asset we are borrowing it. We have borrowed it and we are using it. For example, we have issued debentures, and that those debentures, the funds which we raise from those debentures can be used for any purpose of the operations of the entity. Okay, for any purpose which the management feels apt. In such a situation, that raising of fund or through debentures, that debentures will be considered as general borrowing. And in case of general borrowings, we cannot straightforward compute the interest. First, we have to compute the capitalization rate. Why we are using capitalization rate? Because every borrowing have a different rate of interest. And that different rate of interest makes a cumbersome exercise when we are computing the borrowing cost. When there are 2 borrowings or 3 borrowings, it is possible. But when there are many borrowings, for every amount which you are using from this borrowing, we cannot find it out. ये वाला फंड जो ये एक्सपेंडिचर 5,000 का जो एक्सपेंडिचर है, मैंने इस वाली बोरोविंग से किया था जिसका 10% रेट ऑफ इंटरेस्ट था. जो अनदर 6,000 का एक्सपेंडिचर किया है वो मैंने उस वाली बोरोविंग से किया है जिसका 12% रेट ऑफ इंटरेस्ट है. When you are incurring expenditure in lakhs, we cannot identify small amount with respective general borrowing. In that case, what we do is that we identify what is the capitalization rate by aggregating all borrowing costs which is incurred on all the general borrowings. So capitalization rate हमारा इसमें general borrowing में first we have to find a capitalization rate. Okay. Capitalization rate निकालने के लिए what we have to do is borrowing cost on all borrowings. We have to calculate the weighted average वाला होता है borrowing cost on all borrowings upon all borrowings. ठीक है, on all general borrowings. General borrowings means borrowings other than specific borrowings. On all general borrowings upon all general borrowings, we get a into 100, we get a capitalized, whatever rate comes is a capitalization. For example, let's see. Just a minute. When general borrowings are used for qualifying asset, requires borrowing cost eligible for capitalization is calculated by applying a capitalization rate. That's we already discussed what is capitalization rate and why it is used, the purposes. When specific borrowings remains outstanding, the related specific asset is ready for this already. Specific borrowing till the time that specific asset is under construction will be considered as specific borrowing. After that, it becomes general borrowing. Okay, till the time that specific borrowing is a specific borrowing, we do not use that figure in calculation of capitalization rate. Okay. Okay, one important point is the amount of borrowing cost eligible for capitalization is always limited to the amount of actual borrowing cost incurred during the period. With respect to specific borrowing, even if the expenditure is not incurred, we compute the entire interest cost of the specific borrowing from the day we have borrowed the funds. But with respect to general borrowing, it is always the actual cost incurred during the period with respect to the expenditure we have incurred. Okay. There'll be a mechanism. So calculation of borrowing cost on funds, this I have already covered. Step 1, calculate the capitalization rate and calculation of borrowing cost to be capitalized. Second is, first you calculate the capitalization rate, and after calculating the capitalization rate, you compute the borrowing.
Ma'am, you have gone into mute mode and you are not audible.
Okay, tell me from which
Yes,
slide,
now you are audible.
by what time have we, when did I got to mute? I was not able to see. See, general borrowing concept, when I explained, was it I audible at the time?
Ma'am,
No,
at the
just
time
now
of
mentioned.
ma'am, you discussed like that the general borrowing only we have to calculate the interest only the utilization period.
Sorry. Acha,
Till this slide, you are audible.
okay, okay. I was audible till this time only, na. So for general borrowing, capitalization rate is first computed, and based on that capitalization rate, borrowing cost is computed. And borrowing cost, which is computed for general borrowing, will only be restricted to the expenditure we have incurred on qualifying asset. With respect to specific borrowing, we do not see the expenditure, we see the entire borrowing amount. Okay. Borrowings taken for qualifying asset. Here we are talking about borrowings taken, but here in general borrowings, we are talking about expenditure incurred. That is a difference. That's why the standard talks two different accounting for two different borrowings. That's why we have bifurcated borrowing into specific borrowing and general borrowing. Now you can make out the difference. What is the reason why they are two separate things? Okay. Hope it is clear and I am audible also.
Yes, ma'am.
Yes, ma'am, clear, ma'am.
Okay. Now let's go with an example. On 1st April 20X1, A Limited took 8% loan of rupees 50 lakh for construction of building A, which is repayable after 6 years on 31st March 20X7. The construction of building was completed on 31st March 2000X3, means after 2 years. X Limited started constructing a new building, B Limited, in the year 20X3X4, for which he uses existing borrowings. He has outstanding general purpose loan of 25 lakh, interest on which is payable at 9%, and 15 lakh, interest on which is repayable at 7%. Is the specific borrowing transferred to general borrowing pool once the respective qualifying asset is completed? Tell me, when will the specific borrowing be considered as general borrowing in this case? Students? When
For since one asset, it is specific borrowing, but once the asset is intended to use, we have completed, then the amount which we left, we will transfer it to general specific general borrowing when we use it.
So I want the date. By what date you'll see that this specific borrowing? I got the logic. Once the construction is completed, it will become a general borrowing. What will be the date here?
Ma'am, from 1st April 2024.
Yes. From 1st April 2024, we'll start having a specific borrowing. We'll be considering specific borrowing as general borrowing. Now, this building, construction of new building started from the year X3, X4, it means from 1st April 2000 X3. For the year X3, X4, will specific borrowing be considered as general borrowing?
Yes, ma'am.
No.
Yes, ma'am.
Why?
Ma'am, no, it's not specific borrowing.
That is the catch. That is the catch. What I was asking you. That is the reason why I was asking for the date. Construction of first specific asset completed by 31st March X3. Okay.
Yes.
So you can treat that borrowing from 1st April 2000 X4. But 1st April 2000 X4 means from 20 X4 X5. You will treat specific borrowing as specific borrowing will become general borrowing. But here the case is of X3, X4. For in this year, it will be a specific borrowing only. So what are the general borrowings which we'll be considering?
Yes, ma'am. Already we have two loans or general borrowings, 25 lakhs and 15 lakhs. Along with that, this whatever the outstanding we have, the 50 lakhs loan, that also will be part of that.
No,
Then we.
no. That's what I was saying. Na? For the year 20 X3, X4, I'm talking about X3, X4. X3, X4 means any outstanding of specific borrowing will not be considered because it is still in the nature of specific borrowing. Why? Because that specified qualifying asset is still under construction period. That has not, the construction is not completed. It is not ready for intended use. That's why it will not be, that borrowing will not be considered as general borrowing. Or here we are, what we are doing is that for X3, X4, we have started with new building. That is not the old building. And I'm talking about new building. For this new building, what borrowings we'll be considering? So we'll be considering only two borrowings. Two borrowings, one 25 lakhs for which we are having an interest rate of 9% and another borrowing of 15 lakh for which we have an interest rate of 7%. Only two borrowings will be considered, but 25 lakh.
Ma'am, still I have one question, clarity on this.
Yeah.
The existing specific borrowing, that the construction of the existing building is completed on 31st March 2023, wherein that loan, the remaining loan can be ready for use for another purposes, right?
That is the end of the year, na beta? 31st March 20X3. The construction of building was completed on 31st. Okay, I got your point, what you are saying. Okay, my
Yeah.
mistake. My mistake.
My point is that from 1st April 2023, 1st April 2023, it is available for general purposes.
Yes, sorry, my mistake. The year your X3, X3 start from 1st April 23. Okay, so you'll be having three general borrowings here, one 25 lakh with 25, 15 lakh and another specific borrowing. This 50 lakh will also convert into.
Ma'am, that 50 lakhs, okay, the outstanding will be there because it's not repaid any amount. Still, the 50 lakhs is outstanding.
Yes, because nothing is mentioned how much has been repaid. We'll consider the entire amount of 50 lakh to be outstanding. We cannot assume on our own without information being given that 50% of is outstanding or 25% is outstanding. It is always a presumption that entire amount is outstanding. And then entire amount will be considered for your general borrowing. Okay?
Yes, ma'am. Thank you.
So your general borrowing will be 3 from the year X3, X4. Till the year X2, X3, it will not be considered as general borrowing. Okay, this amount will not be considered as general borrowing. Okay?
Ma'am, if we have repaid something out of that 50 lakh rupees, the balance on that is 31st March 2013 will be considered as general borrowing. Okay.
Yes, definitely. If we something which is not existing at the time of calculation of capacity, what we have studied is actual cost. Actual cost will be only on the outstanding balance. Something which is not outstanding, उस पे आप interest भी तो नहीं निकालोगे ना? वो आपका जब बचा है उस पे आप पे नहीं करोगे तो definitely outstanding balance. In case we have paid certain amount of principal value, repaid certain amount of principal value, then that will not be considered. Only the outstanding balance will be considered under general borrowing. Okay, since nothing is mentioned what amount has been repaid, we are considering entire 50 lakh as general borrowing. Okay,
And ma'am, if the date was not 31st March 20 X3, it was 30th of September 2022.
yeah,
Then we have to split it into the 6 months also.
yes, but for entire X3, X4 it will be considered 1 year only, no? But since you are saying that in case your
But we'll be going back.
sorry,
We'll be going backward. Then 6 months should be split.
yes, in that case that 6 months will also split. That will be the case when we are calculating the borrowing cost for the year X2, X3. At that time, that 6 month weighted period will be considered. But for X3, X4, the entire remaining outstanding principal amount will be considered for entire year. for whole year.
Okay.
Okay. So though your specific borrowing converted into general borrowing in the previous year, but for this year it is general borrowing. अब हम वो वाला थ्योरी एक बार लगा दी हमने, स्पेसिफिक बोरोविंग को जनरल बोरोविंग बना दिया, तो नेक्स्ट ईयर वो जनरल बोरोविंग ही है. नेक्स्ट ईयर हम फिर से उसकी थ्योरी नहीं लगाएंगे कि ये स्पेसिफिक को जनरल में कन्वर्ट किया है. ठीक है, वो तो अब जनरल बोरोविंग बन गई. जितनी भी जनरल बोरोविंग्स हमारे यहाँ पे खड़ी हैं फॉर जनरल पर्पस लोन है 25 लाख 15 लाख, ये हो सकता है कभी आपकी स्पेसिफिक रही हो, आज की डेट में आपकी जनरल हो गई. तो ये उसी तरह से स्पेसिफिक बोरोविंग अगर पिछले प्रीवियस ईयर्स में कभी कन्वर्ट होकर जनरल बोरोविंग बन गई, तो आज की डेट में जनरल बोरोविंग की है, हम उसे जनरल बोरोविंग की तरह ही ट्रीट करके कैपिटलाइजेशन रेट में यूज करेंगे. और वेट हमेशा 1 से ज्यादा नहीं होता, एंटायर ईयर का वेट होगा. Okay, somebody is asking me to speak in English. Okay, so even if your entire year is your that specific borrowing has converted into general borrowing for more than 1 year, but for this current year you will be considered weight as 1 year only. Okay, when you are calculating the borrowing cost or capitalization rate. Got it?
Yes, ma'am.
Yes,
Ma'am, for the new building B, the utilization amount is not given in this case.
Sorry, yeah, tell me.
For in the new building B, the utilization value is not given. How much is amount is used? If the amount is given, then all the three borrowing, we will calculate the interest rate by using it. Then add all the interest, then total value, then we will compute that weighted average rate of interest. In this case, 8.11 is coming. I calculated it.
Okay,
Since the value utilization is not given, so we will not give that answer to this.
Yeah, here the question is not of the amount. See, for exam purpose also, please take into consideration the requirement part of the question. The requirement part of the question is the specific borrowing transferred to general borrowing pool once the respective qualifying asset is completed? Yes. Why? Because the purpose for that specific qualifying asset has been completed. That specific qualifying asset has now completed, construction is completed and is ready for intended use. From that period, specific borrowing converted into general borrowing. No purpose of giving any computation here. Here, answer is to be given in a theoretical form. You have to give an answer in yes or no with the reason why. Okay, calculations are not required. That is the reason the amount of new building or whatever the expenditure we have incurred in the new building, that has not been mentioned. Later, if we add on in the same question that, for example, for new building, we have incurred till date, say 20 lakh rupees, then whatever capitalization rate we have computed from the general borrowings, that is one of the specific borrowing, which later converted into general borrowing, plus 25 lakh, 15 lakh, and this specific, with all the, we'll first calculate the capitalization rate, like what was still 9%, 9% in this case. 15,000 में, that is 7%. And
50 lakh, 8%.
8%. You first calculate the interest rate, interest value, whatever interest value comes, divided by the entire 75 and 90 lakh rupees. Okay?
Yes, ma'am.
Okay, you'll find the whatever figure comes. Let me just give me the figure. Help me in the getting the figure. We'll compute and then we'll move forward.
Yes, ma'am. The interest coming is 7,30,000 altogether.
Okay.
Interest rate is 8.11%.
This interest rate for students, those who have not completed, let me tell you, capitalization rate is equal to 7,30,000 divided by 90 lakh into 100. Whatever we get is the capitalization rate. What the student is saying, 8.1%.
8.11.
11%. So this is the capitalization rate, and this rate will be used for the expenditure which we have incurred on new building. Because it is a general borrowing and capitalization rate is used, we'll be capitalizing based on actual expenditure incurred. Okay. For example, if we have 20 lakhs expenditure incurred, to 20 lakh into 8.11%. And since we are saying for the entire year it is used, then we are not multiplying by it. We assume it is 12 months upon 12 months. But if in case it is less than 12 months, we can change the figure here and we'll get the amount to be capitalized. Okay? Is it okay? Students?
Yes, ma'am. Thank you, ma'am.
Okay, next. Let's move to the next example. Beta Limited had the following loans in place at the end of 31st March 20x2. We have three kinds of loan: 18% bank loan, 16% term loan, and 14% debentures. 14% debentures were issued to fund the construction of office building on 1st July 20x1, but the development activities has yet to be started. On 1st April 20x1, Beta Limited began the construction of plant being qualifying asset using the existing borrowings. Expenditure drawn down for the construction was 5 lakh on 1st April 20x1. See, these all figures are in thousands. These all figures are in thousands. Okay. On 1st April 20x1, Beta Limited began the construction of a plant being qualifying asset using the existing borrowings. Expenditure drawn down for the construction was 5 lakh on 1st April 20x1 and 25 lakh on 1st January 20x2. Calculate the borrowing cost that can be capitalized for the plant. We are talking about plant, not talking about the construction of office building. And we'll in the later slide, we'll also see when the commencement of borrowing cost to be done. Okay. First of all, let's understand that we believe that construction of borrowing cost, commencement of borrowing cost, that provision which is there in Ind AS 23, that is meeting all the criteria. Okay. So 14% debentures were issued to fund the construction of office building. It means this is in the nature of specific borrowing because the purpose or the intention was predefined. Okay. Am I clear?
Yes, ma'am. That the development activities has to be started in that case as well. If it is still in the research phase, so that it must be expenditure for that particular concession of office building for 14% debentures.
Okay. So what should be done here? I just want to understand what borrowings should we consider. Should we consider all the three borrowings or should we consider only two borrowings?
Only two borrowings, ma'am. The 18% bank loan and 16% term loan only to be considered for this.
Very good, Saminathan. Very good. Yes. Since till the time, even if the construction has not started, the criteria for converting specific borrowing to general borrowing is that when specified qualifying asset is completed for its intended use and ready for its intended use. Here, construction is not started. If it is not started, the borrowing will always be considered as specific borrowing because the criteria is completion of qualifying asset, specific qualifying asset. So this will consider as specific borrowing only, and when it will be considered as specific borrowing, we cannot use it for computation of capitalized rate. Only these two borrowings will be considered as general borrowing. Okay. And when we consider these two general borrowings, we have to calculate the capitalization rate also. Here, if you see, the outstanding balance, what was there on 1st April is same on your 31st March also for both the loans, for both the general borrowings. So no weighted average is required. We are considering is for entire year. Okay. So what is the capitalization rate in this situation? 1,000. I'm considering everything, all amounts in thousands. Okay. Into 18% and 3,000 into 16%. Help me with the figure. 180.
1,000 into 18%, it's 180. 3,000 into 16%, 480.
480. Total, it comes to 660, I believe. Okay. So
yes, ma'am.
Total borrowing is 4,000. So what will be the capitalization rate?
660, 4,000.
Sorry?
It's 16.5%, ma'am.
Yes. 16.5%. 16.5%, beta. Those who are getting 16%, please recheck your calculation.
Yes, ma'am, 16.5.
16.5%. Now we are asking calculate the borrowing. The requirement of the question is calculate the borrowing cost. So we are still not there. We have only calculated capitalization rate. We have to calculate the borrowing cost. So what would be the borrowing cost here? Borrowing cost would be the actual expenditure incurred. So actual expenditure incurred is
5 lakh.
Expenditure drawn for the construction was 5 lakh on 1st April 20x1. So we are having two expenditure incurred on two different dates. So borrowing cost and whatever borrowing cost we have calculated right now is per annum cost. This is very important because we have entire period your borrowing amount was same. Okay. So the interest rate which we have calculated is per annum capitalization rate. So borrowing cost will be 5 lakh. 5 lakh तो आपका क्योंकि 1 अप्रैल को ही यूज हो गया है. In that case, entire 16.5% will be used for this figure. But for the second expenditure, that is 25 lakhs, your capitalization rate of 16.5% will not be for entire year. It will be for only
3 months.
3 months. So I want the figure, and whatever the total comes will be the total borrowing cost to be capitalized. Okay. 5 lakh in 16.5%, we get
82,500.
82,500. Okay.
For 25,000, it's coming 1,03,125.
1 lakh 3,000. Sorry, 1 lakh 3,000.
125.
125. So total value comes somewhere 1,85,625.
Yes, ma'am. Correct, ma'am.
Okay. So this is the borrowing cost which is to be capitalized. Got it? Hope everyone is clear here. In case of last question, in the previous question, we simply calculated what is the amount, what borrowings will be considered as borrowing. In this question, we calculated the capitalization rate also, and we also calculated the amount of borrowing cost in case of general borrowing, which is to be capitalized. Okay, so the two questions which we covered has given the entire picture of how general borrowing is considered, or borrowing cost on general borrowing is considered and computed. Okay, let's move on to this test your knowledge question. An entity constructs a new head office building commencing on 1st September 20x1, which continues till 31st December 20x1. Directly attributable expenditure at the beginning of the month on this asset was 1 lakh in September 20x1 and 2,50,000 in each of the months of from October to December. So entity constructs a new office building commencing this, which continues this. Directly attributable expenditure, if we consider it, we are having 4 months: September, October, November and December. We are having, because your substantial period is 4 months: September, October, November and December. Again, I am saying, in case of Ind AS, there is no explanation what constitutes substantial period of time for which is taken by the qualifying asset to complete it. So in an accounting standard, it is generally 12 months or more. But in case of Indian accounting standard, there is no explanation given. So any substantial period which is considered by the management will be considered as substantial period for computation of borrowing cost to be capitalized. Okay, under Ind AS 23. So here nothing is mentioned, as I told you in the beginning also. If nothing is mentioned, consider whatever the period is given, even it is 4 months, 6 months, consider as substantial period and do the compute accordingly, and what is to be capitalized and what is to be expensed out. Don't consider that it is not a substantial period if nothing is mentioned. Consider as substantial period and do it until and unless it is specifically mentioned that it is management intends or considers it as a non-substantial period. Okay? Okay, students?
Yes, ma'am. Got it, ma'am.
Okay. Students, see, I am finding only 2 students to be participative, Vibhu and Saminathan, but I request everybody, Chitra, Akshay, Dilip, Mohit, Sanjay, Saurabh, Neha, everybody to participate, because see, there is no question that who is giving the answer first or second, but I want everybody is understanding the concept of now. In case you are not clear with the concept, you have a serious question, don't worry, ask me, because this is an opportunity for you to ask and clear it out. Once only you will be sound silly, but for always you will be knowledgeable. So if you just restrict yourself right now for not asking the question, how you will sound, whether my question is valid or not, you may have some information lacking. Okay, so don't do that. Ask the silliest question which comes to your mind. Okay. So September, October, November, December, 4 months is your substantial period in this case. Now for September, the expenditure which was done was only 1 lakh rupees. Okay. And then 2,50,000 in each of the months of October to December. So 2,50,000 in every month. The expenditure has been done.
Yes, ma'am.
The entity has not taken any specific borrowings to finance the construction of the asset, but has incurred finance cost on its general borrowings during the construction period. During the year, the entity had issued 10% debentures with a face value of, this is your amount of expenditure. 8,50,000 is what? Your expenditure incurred till date. Okay.
Yes,
And
ma'am.
during the year, entity has issued 10% debentures with a face value of 20 lakhs and had an overdraft of 5 lakh, which increased to 7,50,000 in December 20X1. Now, this we calculated for expenditure. Now we are calculating for borrowings. We need a borrowing also, and borrowings has a different amount in different period. So in September, we were having a borrowing of 10% debentures of 20 lakhs. Okay. इस पे हम 10% निकालें with the face value and overall. So 10% पे आपका डिवेंचर निकाला आपने. Please help calculating with me.
2 lakh.
Student, just give me the figure. I am
2
waiting.
lakh.
Yes, ma'am. 20 lakhs into 10% for
2 lakh.
Okay, for 20 lakh into 10%, we get 2 lakh rupees.
yes, ma'am.
Okay, but this is for the entire year. See,
Yes.
right now we are calculating capitalization rate for the entire year. We can also calculate the capitalization rate for the particular period also, for substantial period also. It depends on you, the way you are doing. Your concept should be clear in the manner whatever you do. You can, ultimate answer will also be same on you. Okay, 20 lakh is in, and you have an overdraft of 5 lakh, which increased to 7,50,000 in December. It means from October to November. From October to November, you were having a general borrowing of 5 lakh with an interest rate of 15%. Okay? No. Interest was paid in the overdraft at 15% for only for October. And then the rate was increased. And this, you were also having 5 lakh of bank overdraft in the month of September. Is it like this? During
Yes,
the entity has
interest rate also changed, and then the loan amount also changed.
yes.
Next one.
So again for September, this needs to be bifurcated. I'm just removing this. This is for sure, but for overdraft we have to make it for September. We were having 5 lakh, okay, with the rate of 15%. October we were having bank overdraft of 7,50,000. No, it was again 5 lakh only, no? Sorry.
Ma'am, in December means the 1st of December, how we can interpret it like the 7,50,000, 5 lakh to 750 lakhs is increased, right? That is in September means is the first day of September, or how we can during the September, how we can understand, ma'am?
No, sorry, I did not get your question, Saminathan. Tell me again.
Ma'am, my question is that the 20 lakhs debenture is very clear, the 10%, that is for 4 months. It's very clear.
Okay.
Because on the first line of that, the entity constituted will continue till 31st December 2021. That's
Yes.
very clear. 4 months we have to compute the interest for the 20 lakhs.
Okay.
For 5 lakhs, it is increased 5 lakhs from September, October, November, December. 4 months. 7,50,000 is in December 2021, which means whether it is from the first day of December or end of the December, how we can assume, ma'am, this?
When nothing is mentioned, we'll consider as 1st December, because it is in December. In December cannot be in any case, it will not be at the end of the December. In December is during the December, and it may be 2nd December, it may be 15 December, it may be 20 December, but not 31st December for sure. Okay. So we won't say as 31st December, we'll consider as 1st December only. Okay. Okay.
Okay, ma'am, because the interest calculation will vary. That is what I am asking this.
That is the reason. And one more way of taking the assumption is that another information was given from first the change in the rate of interest for that bank overdraft, or that is overdraft, is on 1st October. So information for the later period is given at the beginning of the month, so we can presumption can be taken that for other information whatever changes are given, that is also from the beginning of the month. Okay. Okay.
Right, ma'am. Thank you.
Now, students, what I'll be doing is that I'll be asking everybody to participate. So that's why I'll, Saminathan and Vibhu, instead of you giving me the answer, I'll take the name and I want that person to give the answer. Okay. I want everybody to be participative. So I'll be asking a person and they will give me the computation. Okay. So now in this situation, what we have done, we have distributed the borrowing month-wise. Whenever there is a change, either in the rate of in the rate of interest or in the amount of the outstanding balance, we have done it based on that. September, we are having entire debenture 10% for 4 months. So that's why that is the reason here we have to calculate the months also. So for 4 months, we are because others we have to calculate for 4 months. That's why we are doing it for this borrowing of debentures also for 4 months, September, October, November, December. For bank overdraft, for 5 lakh, it was outstanding for 3 months, September, October, November. But because rate of interest is changing, we have further bifurcated into borrowings, September, October at the rate of September and October. Until first, and the rate was increased. Sorry, October भी नहीं रहेगा ना यहाँ पे, October और November ये हो जाएगा, यहाँ पे आ जाएगा October and November. Okay, और यहाँ पे आ जाएगा. So, should I ask? I'll ask Mohit. Mohit, just give me the calculation for 5 lakh into 15% for 1 month. Because this figure 1 month के लिए ही बस आपकी रही है 15% की rate of interest. I want a figure for these two. Mohit, please give me the answer for debentures. What will be the interest amount for September? I'm asking Mohit and also one more person, Sanjay. By the time, Sanjay, you will give me the answer for
Yes.
overdraft amount.
Yeah, it would be 6,250.
For which figure you are saying?
September.
September के लिए debenture वाला
5 lakh into 15% into 1 by 12.
अच्छा, you are talking about overdraft value. Please tell me the figure again.
6,250.
6,250. Okay. And what about that debenture wala 20 lakh into 10% into 4 by 12?
It comes to 66,667. 667.
Are you sure this figure is coming?
Yes.
Yes, ma'am. Right, ma'am. Coming.
Okay. Okay. 10% and then it is coming for 4 months, na?
Yes.
Okay, fine. Now I'll ask Saurabh. Saurabh and Neha, they will give me for another 2 information, October and November. Tell me, Saurabh, and for December, Neha, you tell me the figure. October and November, what will be the interest amount? I want it into 2 by 12. Sorry, I have missed that, and it will be 1 by 12 again here. Yeah, Neha, tell me.
Yeah, ma'am. Ma'am, for October and November, 16% of 5 lakh of 2 months is 13,333.
Okay. And what about December month?
Ma'am, December month, 10,000.
7,50,000 into 16% into 1 by 12.
Yeah.
10,000. So what is the total figure?
Ma'am, 96,250.
96,250. See, students, now if you see what we have done here is we have taken a weighted average here. So this borrowing will also be considered in the form of weighted average. Okay. For the weighted average period, you have to calculate. Just let me know what will be the amount of borrowing here. Total entire amount. This is already for the month wise. This borrowing outstanding balance is there. Tell me the total figure here. I want the figure. Total amount of this total borrowing is 20 lakh plus 5 lakh plus 30 lakh, 30 lakh plus 37 lakh.
37 lakh 50,000.
Sorry.
37 lakhs 50,000.
Okay, 37 lakh 15. But we need a weighted average for this also, na? Because we have done interest का weighted निकाला, तो हम इसका भी weight निकालेंगे ना?
Yes.
तो weight इसका क्या है? इसका 4 months है, इसका आपका 1 month है, इसका आपका 2 महीना है, 2 months है. For this period we are having 1 month. So I want the weight based on that. Divided by 4, whatever is coming, na? Otherwise you do it. What will be the weight here? 20 lakh into 4, 5 lakh into 3, 7 lakh 50 into 1 divided by 4. Just let me rub it out and make it clear. I think there students, you're finding it difficult to understand. Since we are taking the weightage, we got this figure 96,250, na? हम इसको एक बार ना साल भर का भी करके we'll see कि how we are doing it for a year also. That will be easy for you. Please remember 2-3 figures. And after this question, we'll take a break. Okay?
Okay.
Break will be there only if you wish. Otherwise, I can continue. No issue. So we have an expenditure which we calculated was of 8,50,000. Is it it? Is it there? What were the figure which we calculated was 8,50,000, na? Total figure. I'm just mentioning it so that we don't need it. We got the interest expense for the 4 months, which was 96,250. Now we need an amount, weighted loan amount also. Weighted loan amount will be 20 lakhs we are having for 4 months. We are having 5 lakh की value for 3 months. December में increase किया ना, तो it was September, October, November. We were having 5 lakhs outstanding overdraft balance for 3 months, and then it increased to 7,50,000 for 1 month. We get the figure here
8,54,167 is coming, ma'am.
Okay, what do you got?
8,54,167 altogether.
No, beta, should not come like that. I don't think so. Should come like this. How will it happen?
Ma'am, for 20 lakhs is a 4 months, ma'am. 20 into 4 divided by 12, it's a 6,66,660.
No, don't do 4, na. Okay, chalo, you are doing it for 4. You are doing it for 1 month. Whatever you are calculating is for calculating for 1 month, na.
No, ma'am. For interest, we calculated 4 months, right? For 20 lakhs. The same way we have to do it for 20 lakhs is 4 months. When I am putting it, 6,66,667 is coming.
Don't do it for 12 months. Chalo, theek hai, you want to do it for 12 months, do it. But right now what we are doing is 20 lakh into 4. We are just taking the first, we are making it for an entire period. For 4 months के लिए हम करें, because we are doing interest, we have calculated for 4 months. So everything is to be done for 4 months. If you are doing it 4 by 12 ना, it is for 4 months का आपका outstanding weighted आ जाएगा. चलो आप निकालो 80 करते हैं. चलो 80 lakh आपने कर दिया 4 by 12 ना. Let me do it from your style only. Okay, 20 lakh. What you did was into 4 by 12. That's what you are saying?
Yes, ma'am. That's what I did.
And you got the figure of 66 lakh?
No, 6,66,667.
Okay, this is the figure which you got. Okay. Now do it for please 5 lakh also.
5 lakh I am getting 41,667.
Okay, divided by 12.
12.
Okay. How much you told?
41,667.
How it is coming? Mine is not coming like that, na?
Ma'am, 5 lakh divided by 12, ma'am.
Divided by 12 into 3 also, na? You'll do into 3 also?
No, ma'am, because 1 month only we calculated, no, the 5 lakhs, the September month alone.
नहीं तो बेटा later also here we are not doing for interest. चलो you do it like that also. आप उसके बाद 5 into 12 2 भी तो करेंगे.
Yes. Well, what I did, ma'am, the 5 lakhs I did it for 1 month. Again 5 lakhs for I did it for 2 months.
Okay, so it becomes same thing, na? चलो tell me.
Yeah, same thing only. 3 divided by 12 also fine, ma'am. I did in the systematic way.
Okay, because I rubbed that table. Okay, tell me the figure. Two different figures you tell me.
Yeah, 41,667.
Okay.
Then 83,333.
Okay. And what about this figure? 7,50,000?
7,50,000 for 1 month is 62,500.
Okay, now I want the total also.
Yeah, 8,54,167.
8,54,167.
167.
This is what your borrowing value. Okay.
Yes, ma'am.
Yes, same figure comes by calculating other way also. Same figure comes also by doing it other way also. 8,54,167.
Yes, Sanjay, you are right. But that's what is that was the reason I was saying. We can calculate in two different forms also, divide it into 4 and then at the end we can divide it by 12, or we can multiply 4 by 12 into 3 by 12, 1 by 12, or we can do like what Saminathan has done, 5 lakh first multiplied by 1 into divided by 12, and then 5 lakh into 2 divided by 12.
Yes.
In all the cases, your answer will same. That's what I was saying. In this case, even we calculate capitalization rate for 12 months or capitalization rate for 4 months or capitalization rate for 1 month. Ultimate your borrowing cost capitalization for 4 months will be the same amount. Okay. Because of rounding off, because of decimal, there may be some changes, but the concept should be clear to you. Okay.
Yes.
Yes, ma'am. See, when we calculated the interest in such way, so when we are working the capitalization also in the systematic way, it will be easy. We will not miss out any calculation. That is the reason I go like this.
No, definitely. To make anything simple, it is very necessary. It should be broken in different parts, small parts. Simplify करने के लिए, समझने के लिए, it is very necessary that you break it into small parts. It's good. No way. In fact, that trick is right. Earlier also we made a table where we had done in 4 steps. So that's why you do it in that 4 steps only. That's why I did 1, 2, 3, 4. It's okay, completely okay. Now I want a figure here.
11.27%, ma'am.
11.25. Now this is the rate for the entire year. Okay.
That is for 8.5 lakhs. We can put 11.27%.
Yes. And you can see what is the borrowing cost which is there. Now, if you go through the study material, let me tell you, because I get many queries from these students. In the study material, whatever we have calculated is the capitalization rate for 4 months. Okay, I just go through the study material, if the capitalization rate which is provided in the study material is for 4 months, but if you do it again here, see, divide by 4 months, if a year is having 4 months with 3 parts, it means divide by 3. I hope I'm understand you all are able to appreciate what I want to say.
Yes, ma'am. Yes, ma'am.
You get an amount of 3.756. Okay. This is the rate 3.756 for interest for 4 months, not a per annum interest. It is an interest for 4 months. So what is given in the study material is 3.756 for the capitalization rate for 4 months. It is nowhere mentioned that it is a capitalization rate for per annum, but it is nowhere mentioned that you cannot do it in this manner. During the class, we did it in the different manner, which is a solution which is given in the study material, but later on, with adding one more step, we came to the answer which is given in the study material. Hope it is clear to you all. What is required is the conceptual clarity. In exam, you can do till 11.27 per annum, you can write it and your answer will be correct, absolutely correct. Don't worry that it is not matching with the study material solution, so your answer will not be considered for evaluation or you won't get marks. It will not be like that.
Ma'am, in this case, the 11.27 is coming, so that 8.5 lakhs, which means the 1,000 for September and 2,50,000 each for 3 months, is altogether is 8,50,000 is coming. 8,50,000 into 11.27% in multiplied by 4 divided by 12.
Yes. And when you are calculating 3.756%, don't simply 8,50,000 into 3.756 you will do. Into 4 by 12 you won't do.
Right, ma'am.
आप दोनों ही केस में आपका आंसर सेम आ जाएगा. So ultimately we reach to the same solution by two different manner of doing the things. So what I want to say is that don't think that the two different solutions are given or two different way of doing that. This is only for your conceptual clarity, and that is the reason I have taken this question during the class, that you won't, the difficulty with students face कि यहाँ से तो different तरीके से किया, हमने आप ही तरीके से किया जो हम बाकी solution कर रहे थे per annum basis पे, लेकिन we arrived to the solution which is given in the study material. Even in the exam अगर आप इतना नहीं करते हैं, even in the exam if you don't do this portion, आप ये नहीं करते हैं.
Ma'am, please converse in English, ma'am. I do not know the Hindi also.
Sorry, Saminathan. Sorry. See, 11.27% per annum, which you do it, if you do in your examination, you arrive at 11.27% and you stop your solution there only. You don't convert that capitalization rate into 4-month period, then also it is perfectly okay. Don't be worried that your answer is not matching with the study material solution, so you will not get the marks in the exam if same question appears. No, that will not be the situation. For everybody, I am saying that the reason for taking up this question during the class is the conceptual clarity which I want to tell, and just to tell you how that 3.756 which is there in the study material, how it has arrived and why it is not wrong, and why this is basically why it is not wrong and why it will give you the same result. Okay, what I am trying to convey, hope that is clear to everybody. Neha, Saurabh, Sanjay, Bibhu, Saminathan, Dilip, Akshay, Chitra.
Yeah, it is clear.
Yes.
Good.
Ma'am, earlier that capital, whatever the capital is there, I'm not aware that we need to split that as well, like we did for interest rate. I simply ordered 37 lakhs 50,000 instead of doing the split.
But that won't, you are not, in that case, you are not matching apple with apple. If you are saying that you have done interest as a weighted average, you have calculated the interest for 4 months, but you are not taking the outstanding for 4 months, then you are not matching, that matching is not there, na?
Yes, ma'am. Initially, I thought that I have to do like that, but now I understood. Now I got the clarity, ma'am. We have to split that as well. Capital as well, we need to split. Accordingly, we have to compute.
Yes, for weighted average calculation, both okay, good. Now, can we move part? All want a break or we can continue?
Yes, ma'am. We need break, ma'am.
For 5 minutes break? Everybody, just 5-minute break is okay, na? We'll come after that. We'll come at 9:10. Okay, we'll start the session again. We'll resume the session at 9:10.
Okay, ma'am. Thank you.
Okay, everyone. Yeah. Shall I
Yes.
wait? Let me see who is still waiting now. Okay. Saminathan has not come yet. Okay, let's wait for a minute.
Yes,
Saminathan.
ma'am. I joined, ma'am.
Okay, good, good. So have Saminathan, Chitra, Bibhu is also there, Sanjay is there, Dilip there. One girl was also there, na? Besides Chitra, one girl was also there. No, Chitra was there, one girl was there. I called her, na? Let's wait for her though to come.
Neha.
Neha, yeah, Neha was also there. Let Neha also join. Again, Saminathan, we are not able to see your name in the list. Okay.
Yes, ma'am. I am visible, ma'am. I am there.
Acha. Sometimes your name is appearing in the participants list and sometimes it is not. Okay. So we completed this question. Now we move on to the next concept. Just a minute. Period of capitalization. Till now, what we have studied is that how borrowing cost is computed, when it is computed. Borrowing cost is computed when it is probable and we are able to easily measure it. Okay. We considered how borrowing cost is to be computed on general borrowing, on specific borrowing. In specific borrowings, we, irrespective of the amount of expenditure we have incurred on a qualifying asset, we see what is the amount of the borrowing. We consider borrowing cost based on the amount of borrowing, and then in case we have any temporary investment, that is reduced and the remaining amount is capitalized. But in case of borrowing cost on general borrowings, we see what is the amount of expenditure we are incurring, and based on the expenditure we compute the borrowing cost, applying the capitalization rate. Till that we are clear, we are through with that. Now there is one more concept which is given in Ind AS 23, that is period of capitalization. What is period of capitalization? We have three periods, 3 points where we have to, our capitalization is to be checked out. Okay, first is when to start capitalization. Till now we see ki what is to be capitalized, how to be capitalized. Now we are saying from when, from what date we should start our capitalization. Commencement of capitalization, that is considered as commencement of capitalization. Okay. Second part is your suspension of capitalization. You're not completing, you're not ending it, but you're giving a halt or pause. That is suspension of capitalization. We'll see that also. And then is cessation of capitalization, means we are ending the capitalization process, okay, of borrowing cost. So first start with commencement of capitalization. When commencement of capitalization, what is to be checked? There are three criteria which we have to check, and all the three criteria have to met on one particular date. The date on which that all the three criteria are met is the date from which we will start our capitalization. So the three criteria are, first is it incurs expenditure for the asset. When an entity start incurring expenditure for the asset, we'll mention that date. The record date will be the date from which the expenditure is being started, incurring of the expenditure on that particular asset. Second is it incurs borrowing cost. You have started incurring expenditure on the cost, but you have not taken any borrowing. So there is no borrowing interest on that borrowing. So no purpose of using this standard. Okay. So you have to see that you are having any borrowing cost and you have started incurring. That accrual of that borrowing cost starts from that particular date. That date you have to note it down. Okay. And a third criteria is it undertakes activities that are necessary to prepare the asset for its intended use or sale. You started incurring the expenditure. For example, you started incurring the expenditure by giving advance to the supplier, by buying the equipment, but construction activity on that qualifying asset is not started. So we have to see that construction or the undertakes the activities that are necessary to prepare the asset for its intent. Any starting date we have to see. It is not that ki completion we are looking for. We are looking for the starting date. It undertakes activities that are necessary to prepare the asset for its intended use or sale. So when all the three criteria meet at particular date, that is the date from which you have to start the commencement of capitalization. Let us see an example to understand this concept. Okay. Okay. First, there are 2 points. Amount of expenditure include only those that have resulted in. Achha, this I just wanted one example to be taken for this. Should I go to the study material? I am having this in my slide also. Just a minute, huh? Let me see where this in this question. Okay, I'm giving it through the example here only. Suppose we incurred an expenditure for the asset on, say, we started having we gave an order, and on order we made some initial payment to that. It means the expenditure has started. So we give it on, say, 1st June. We did some expenditure on the qualifying asset. Then we took a borrowing, and that borrowing cost started, say, from 1st July. And it undertakes activity. The entity started doing the activities on the qualifying asset to prepare the asset for construction, acquisition, or production. That activity started somewhere, say, on 15th July. So, which is the date on which we'll say that all the 3 activities have done will be 15th July. The later period. From later period, we can say expenditure bhi ho chuka, where expenditure has already been done. On 15th July, we'll say borrowing cost is also started. On 15th July, we'll say that activities have also been started. So this is the date where we see that all the 3 criteria are being met. So we'll start capitalizing the borrowing cost from this particular date, 15th July. Now I want a question which should come in your mind. Everybody, any question coming in your mind regarding this? I just want to understand how much you are able to appreciate this concept. And what about from 1st June to 15th July, or what about from 1st July to 15th July? What would happen? Any question which is coming to your mind? See, I want you all to be very inquisitive. To understand the concept, it is very necessary. Okay, from 15 July, this is the step which is given in the standard. But what will happen if it is not from 1st June? What will happen if it is not from 1st July? What will be the period between that if we are having something?
It is a work in progress period, ma'am. That's what I am thinking.
No, that is work in progress, but we are talking about capitalization of borrowing cost. Now, with relation to your capitalization of borrowing cost, any question which is coming to your mind?
Yes, what would happen to the borrowing cost from 1st July to 15th July? Because
Very good, very good. That's what I was expecting from you all. What would happen to the borrowing cost from 1st July to 15th July? That is not the period for capitalization. That period will not be considered. Okay. So from any borrowing cost which you have incurred from 1st July to 15th July will not be considered for capitalization. And something which is not capitalized will go to
P&L.
P&L. Simple. Okay. Something which is not capitalized will go to P&L. Though it is a specific borrowing, but it is not meeting the criteria of period of capitalization, commencement of capitalization, we cannot start capitalization. And since we cannot start the capitalization, but still we are incurring the expenditure, that expenditure will be in P&L. Okay? Clear to everybody?
Yes.
Okay, we'll move to next part.
Ma'am, I'm not clear, ma'am. Please explain once again, ma'am, please.
Okay. So, Saminathan, see, right now, what till this period, what we studied is that for specific borrowing, we are calculating borrowing cost for the entire amount of borrowing. Okay, but what we are seeing is for entire amount of borrowing we have to start. But what is the commencement of capitalization? From which date we have to start calculating the borrowing cost? It is the 3 criteria which is to be met. And now that there are 3 different dates for all the 3 criteria. First criteria where is 1st June. On 1st June, we started incurring expenditure on the asset. On 1st July, we started incurring borrowing costs. Since we are talking about borrowing costs, we are learning Ind AS 23 borrowing cost. And for borrowing cost, until and unless there is no entity is not incurring any borrowing cost, there is no purpose of taking any other thought process. So, आपका 1st June से whatever the period between 1st June to 1st July है, we are not talking about that because there was no borrowing cost at that period. We are talking about 1st July to 15th July. For this 15 days, what is to be done? Because we started incurring expenditure, we started incurring borrowing cost from 1st July, but commencement of borrowing cost is from 15 July. Means from 15 July onward, 15 July to the period when the qualifying asset is ready for use, for that particular period we'll be taking the borrowing cost, which is to be capitalized. Is it okay now? Saminathan, are you understanding it? So for say for example, you started your construction on 15 July 2024. Now you to take 2 years and you complete your construction on 15 July 2026. Okay, for this entire 2 year, whatever borrowing cost is there, that you will capitalize. Got it?
Right, ma'am. Got it, ma'am. Then my question is that when there is a specific borrowing is there, on the first question we discussed that on the 5 lakhs, even though the 5 lakhs we used on the 1st April, the remaining 5 lakhs we used on the 1st October. So still we started using the entire interest cost on the specific borrowing. That is what I somewhere is.
No, I got it. I got your confusion point. What is your confusion? See, in that case, other two informations were not mentioned. When we started incurring expenditure, in that case, we also the information was not given that when the entity started taking the activities that were necessary to prepare the asset for its use. So we presume that the other conditions of commencement of capitalization was met on the date the borrowing cost started. Okay. Now the question what we studied there was, though we were having a 20 lakh borrowing, but the expenditure was done only for 5 lakh to the amount, to the extent of 5 lakh, but we calculated borrowing cost for entire 20 lakh. That's what you are saying?
Yes, ma'am.
What I was saying was for the amount. That question was based on amount. Here we are not talking about amount. Here we are talking about the period, date. Okay. Once this criteria met 15 July, suppose on 15 July, we took a loan of 20 lakh. I'm taking again, I'm coming back to this one here. I took a loan of 20 lakh. 20 lakh may I did my expenditure on this. I incurred borrowing cost from 20 lakhs from the day on 1st July. But my commencement period started from 15 July. So from 15, but I have done only expenditure of 5 lakh on 15 July. Okay, sorry, this wala portion. I incurred expenditure of 5 lakh. Okay. Now for 5 lakh, when I started incurring the expenditure and my commencement period is 15 July, from 15 July onward, whatever expenditure for 15 July onward, for specific borrowing, I'll be calculating interest cost on entire 20 lakh, irrespective of amount of 15 lakh. Right now I'm talking about the date, but calculation from 15 July onwards will be on the entire 20 lakh rupees, not to the extent of 5 lakh what we are using for expenditure. Is it?
Yes, ma'am. Ma'am, now I am very much clear, ma'am, because it incur expenditure for that asset. It incur borrowing cost. Borrowing cost would have incurred prior to the expenditure as well. They might be got the sanction limit and get ready for that. So that may be ideal for 2 to 3 months. Then they will begin. So whenever the expenditure is incurred for the asset, from that period only we have to capitalize that borrowing cost. Now I am very clear, ma'am. Thank you so much.
Okay. Next, we move on to next slide. Expenditure incurred on a qualifying asset. The amount of expenditure on a qualifying asset include only those expenditures that have resulted in, okay, till date we were studying how to compute borrowing cost, what will be the amount of borrowing cost, when to start the capitalization. Now we are talking about this portion, expenditure. How to define what are the constituents of expenditure. We are studying this part. We studied incurred, we studied this date also. This purpose is for date calculation. We studied that also. Now we are studying the first part, what comes under expenditure. Be careful, I'm going to ask some MCQs at the end, and one question will be on expenditure also. So I want everybody to pay attention here. The amount of expenditure on qualifying asset include only those expenditures that have resulted in payment of cash, transfer of other assets, or the assumption of interest-bearing liabilities. any expenditure which we have done on in the form of by paying cash, like we have paid, we have bought any asset, bought any equipment for the construction of building, we have given any advance for the raw material like cements or sand, whatever it is, whatever the material is used, iron rods, steels, whatever is used, we have paid them in cash. So that cash payment forms the part of expenditure. Transfer of other assets, like instead of getting for construction of building, I was having one crane, I gave that crane to you for instead of any payment in cash, I did it in the form of asset. So that will also be considered as expenditure, amount of expenditure to be paid. I was having any amount, I paid instead of that assets. Assumption of interest bearing liabilities also. Any interest bearing liabilities, I am, instead of paying you something, I took your liability and I'll pay you on that behalf. So that will also be considered as payment of, that will also form part of expenditure. Okay. So expenditures are reduced by, now we have done expenditures, we incurred some expenditure on the construction or on the qualifying asset, but that expenditure will be reduced by any progress payments received. Like what we incurred, say 5 lakh till construction. For that we received some progress payments, we received 1 lakh rupees. So my outstanding expenditure will be ultimately net figure, that is 4 lakh rupees. So I'll calculate the amount borrowing cost on the outstanding balance, not for which we have recovered something. Okay? Grants received in connection with the assets. For example, I was constructing something and government gave a grant on that. So that grant is no more, that grant is an income for me. So it will definitely reduce my expenditure value. Okay. So my expenditure amount will further reduce by two amounts, by any progress payments received or any grants received, because they are no more my expenditures. I have recovered them in the form of income, and that income may be used for paying my borrowings. So I will not consider as an expenditure, and no borrowing cost will be computed on the payments recovered or payments or grants received on behalf of those expenditures. Activities necessary to prepare asset for its intended use or sale. What are the activities which are required for an asset to be considered as ready for intended use or sale? It includes technical and administrative work prior to commencement of physical construction, like what Saminathan gave the example. We have taken some permit or license, if it took 2 to 3 months to before we start for the construction activity. So that will also form part of the activity which is necessary to prepare assets for its intended use of it. If you see, there were 3 criteria in the commencement of capitalization: expenditure incurred, which we learned in the previous slide. Now we are talking about activities necessary to prepare asset for its intended. So third criteria, which was necessary activities which an entity undertakes, that what constitute or what can be included in those activities, that we are studying right now. Technical and administrative work. Then is your, what is excluded is the holding of asset when no production or development that changes the asset condition is taking place. Any activity we have, I have given you, I have taken a crane for the building, but I am not start doing any construction on the building. That crane is ideally kept, is in place, so then that is not considered as, because I have procured a crane, the activity is considered as started. No, until and unless that building construction के लिए वो crane is not being used, we cannot say that necessary activity has been undertaken by the entity. Okay, for example, borrowing cost, this example is also given in your study material. Borrowing costs incurred while land is under development are capitalized during the period in which activities related to development are being undertaken. However, borrowing cost incurred while land acquired for building purpose is held without any associated development. I gave you an example of crane. Here, the example which is given in the study material is of land which you acquired, on which you have to construct a building, but the time when you have not started the construction process, that acquisition of land will not be considered as activities necessary to prepare an asset. For a qualifying asset is your building, and that building by construction, since it is not started, acquisition of land will not be considered as activity necessary. Why? Because land itself is an asset which can be ready for your use. It is ready for use. Until and unless you start construction process, we won't say that it is an activity for the qualifying asset. Okay? Clear to everybody?
Ma'am, here my understanding is that see, actually we have started that activity, the building construction, say example. Suddenly, after constructing the building, we borrowed the loan also. So we are eligible to include the borrowing cost. Suddenly, the heavy rain came and stopped the construction activity for 3 months.
Need something, then we'll come to that. That is suspension of capitalization. We'll come to that.
I am talking about what is excluded. No holding of asset when no protection or development that changes that the asset condition is taking place. What it means, I'm not getting clarity on.
Here we are talking about initial process. Once the activity started, see, we are talking about commencement of capitalization. Commencement of capitalization means when the activity necessary to prepare the asset for its intended use or sale is also being undertaken. So once it starts undertaken, after that, if there's a halt in between, any halt in between, that is a separate thing. Right now we are talking about once it is started. What you are talking about is a halt in between. For halt in between, we have a separate provision. What to do, we'll talk about that also. Right now what we are talking is when it is started. Acquisition of land is there, land is ideal, but what you are saying, suppose because of the heavy rain it is not, then we won't say that it is because of any this is very normal. It is natural, so we won't consider it as not being started. In that case, we'll consider that the activity has been started. Okay, that's what you want to understand, na?
Okay, man. Now it is clear that to holding the asset when no protection or no development, before starting itself, there is no activity started. In that case, starting state, this is
Any avoidance of activity from our end, intentional avoidance will not be considered as activity necessary. We will not be considered that it has been undertaken. Any natural delay which is assumed or which is very acceptable, that will not be considered. For example, what I want to say is, suppose the example which you have given, rain, because of rain you were not able to start the construction process, but your intention was to start it. Okay, so this is a normal delay. So that is acceptable, and in that situation, we'll say that when we acquired the land, activity started. The necessary activity was undertaken. But we acquired the land, but intentionally we were not able to start. We got it because of procrastination or anything. We can say that we thought, okay, we'll start it after 2 months. In that case, that 2 months wala period we will not consider as a date where we will say that activity has been started. That depends on the intention also. That's why we say management intention. Okay.
okay, right, ma'am. Whether it is controllable, if it is controllable, then it is their management mistake. If it is uncontrollable, that's okay.
Okay. Okay.
Got it, ma'am.
That will study at the time of suspension of capitalization also. Okay. Now we are having this example. I'm skipping this example because now it's already 9:33. I want 2-3 concepts to cover, and I want some questions also to be covered. But this example already I have given to you, so I'm just skipping this. Still, if you want, I can run quickly. I'll run to this. This was for the date when we are starting. See, 15th May, we have taken the loan interest relating to, and 2nd June, technical site planning commences. 19th June, expenditure on the project started. 18th July, construction work commenced. Now see, for the activities, when we was talking about activities, what considers under activity? Technical and administrative activity. Even it is not physical construction, but technical and administrative activity will also constitute as included for activities necessary to prepare. So in this case, even physical construction starts on 18 July, but technical site planning commenced. So we will say that this date is one of the criteria met on 2nd June, one of the criteria met on 15th, and one of the criteria of incurring expenditure incurred on written. So these 3 days will be considered, and the latest date, or the last date, will be considered as the date for the commencement of capitalization. Okay, that is 19 June. 18 July, physical construction started, but the activity, technical site planning, will also be considered as the activity, necessary activity for construction of the asset. Okay. So in this case, your answer identify commencement date. Your commencement date will be 19 June. Okay. Now what Saminathan was asking, suspension of capitalization of borrowing cost. Suspension of capitalization of borrowing cost, again, we already discussed that when done, when active development of a qualifying asset is suspended. We were already in a full-fledged form, we were doing construction, and all of a sudden that active development came to hold. Okay. And when not done, when an entity carries out substantial technical and administrative work. Okay? When your physical construction stopped because some administrative or technical work was being done at the end. So something is going on, though physical construction is not going on, but the activity is still carrying out. So we won't say ki activity has stopped. So when activity is not stopped, suspension of capitalization will also not stop. Got it, everyone? Okay.
Yes.
Yes, ma'am.
Yes, ma'am. Got it, ma'am.
One more thing, when a temporary delay is necessary part of the process of getting an asset ready for its intended use or so. For example, you are digging the land, you are constructing a land, you have constructing a building, you are digging the land, and during digging you found a big rock, and that rock took more time as was expected. See, we thought we'll remove that rock in one day, but it took 5 or 10 days. So temporary delay won't stop your capitalization. So when a temporary delay is a necessary part of the process, you have to remove that rock. Until and unless you remove the rock, you cannot do that. So that is a necessary part of the process. Something may come under the beneath the earth which is unexpected, and because of that some delay is happening. So that delay won't stop your construction, won't stop your capitalization of borrowing cost. Okay.
I mean, can this example of rain be said as temporary delay as necessary part of the process?
If you are in somewhere in a rainy area, if you are in a rainy area where rain is very frequent, very often, and unexpected also, then it is very natural. It is beyond your control. So in that case, yes, it will not stop the capitalization of borrowing cost. Where rain, something is that like in a rainy area, it is very natural process, so you will not stop. Where rain, in general, rain will not cause much of delay, so that is not a very Vaisa criteria. We have to stop the gap. 1 day or 2 days may affect. So suspension of capitalization is basically it is going to affect the amount, material amount will be when there is a delay of big period, a longer period.
Yeah, if there is a strike, government restriction.
Government restriction, government has changed the law, because of that you have to rework things or something, you have to stop the construction, that kind of thing may reduce your stop your, I mean, suspension of capitalization will be there. It's not that key you have your borrowing cost capitalization process is completed or ended. It is only that you have to give a pause to that particular period. Okay. An entity does not suspend capitalizing borrowing cost. Okay, these were when done and when not done. Okay, example, construction suspended between October 2000 X1 to January 20 X2. During the period, certain heavy construction equipment under use was shifted to another site. So this is the period which is not natural. It was in your hand. If you want, you can shift it. If you want, you need not shift it. In this case, capitalization of borrowing cost needs to be suspended since active development is interrupted. You stopped it, na? So it is not that some activity is going on at the back end. Okay, please be participative, because when there is a deep silence, I feel that nobody is able to understand things.
Understood.
Got it, ma'am.
So just be participative, just to
Not like that, ma'am.
but I want your answer. I want, okay, madam, this answer, so that I understand that all are listening to me. Huh?
Yes, ma'am.
We are
Since
very much listening to you.
this equipment is shifted to another building, so that they voluntarily disturb that activity. So it has to be suspended as well.
Because any activity is not going on, even in the back end or on the front end. So it means the active development has been interrupted. So here the suspension of borrowing costs will take place. When qualifying asset construction is about to complete, there was a temporary delay of 20 days on account of some technical reasons. In this technical reasons, you are working on that technical reason. Like I was during the class, I was not able to use the pen properly. My pen got stuck up. So there was some beach में delay. But we can't say that my classes was not going on or I was not working on that. Na? So
Lecture is suspended.
in that case, borrowing cost will continue capitalization. Okay. Okay. Cessation of capitalization. Something someone was asking? Saminathan, you were saying something?
No, ma'am, it's clear, ma'am. That's what I told.
Okay. Now is cessation of capitalization. Cessation means complete, where you are ending it. After that, you are not going to capitalize any borrowing cost. Means after that, whatever borrowing cost you are going to incur will be charged to profit and loss. So capitalization of borrowing cost should cease when substantially all the activities necessary to prepare the qualifying asset for its intended use or sale are complete. Substantially all the activities. Maybe that 100% activity is not completed, but substantial all the activities are complete, then also we'll stop capitalizing the borrowing cost. An asset is normally ready for its intended use or sale when the physical construction of the asset is complete, even though routine administrative work might still continue. Okay, so routine administrative work may be that you are going for launch, you are going for some registration of their building. So that is routine administrative work, but your physical construction stops, so you can stop your capitalization of borrowing cost. When construction is completed in parts, see, right now what we till now what we studied was that we assumed that there was one building and that building once completed, borrowing cost was also completed. It may happen that you are simultaneously doing construction work for many assets, and the time one asset is completed, borrowing cost ka capitalization will also end at that particular point of time. If that construction work is interrelated, without completion of all the parts, you cannot start the activity, you cannot start the intended use. In that case, that completion in parts will not be considered. But if one part can be used independently, then in that case, borrowing cost of that part will stop and borrowing cost capitalization of other part will continue. Okay. For example, I am building a factory. If I am constructing a factory, there are many parts for the factory. First is, say, I'm doing a power generation facility I'm constructing. In that case, burning of coal, furnaces to be developed, to be constructed, then boilers to be constructed, then pipelines to be constructed. Even if I did construction of furnaces, I cannot start using furnace until and unless boiler and other parts are also ready. So in that case, my borrowing cost will not stop. I have to continue capitalization. However, if I am building a society, I'm a builder, I'm building a society, I'm building 10 towers in that society. My one tower is ready and I have given the position for that. In that case, the capitalization of borrowing cost of that tower will stop. And for other towers, what we'll be doing for other towers will be continue capitalizing the borrowing cost until and unless their construction is completed and their intended use is started. Okay, they are ready for the intended use. Okay, is it clear?
Okay, ma'am.
It's clear.
Yes, ma'am.
Okay. If each part is capable of being used, the entity shall cease capitalization of that part. If the construction continues on other parts, then that already explained to you. Example, H Limited, a real estate company, gives immovable property on rent. It has completed on 31st May 20X1 a commercial complex consisting of various offices that could be rented out. It expects that commercial complex will be completely rented out by 30th June 20X1. However, due to adverse market conditions, only 10% of the commercial complex could be rented out by its reporting date, that is 31st March 20X2. H Limited wants to capitalize the eligible borrowing cost incurred up to 31st March 20X2. I want the answer from you all. Can we capitalize the borrowing cost till 31st March 20X2?
No, ma'am.
Why?
Yes, ma'am. Up to the 31st March 2022, we can capitalize for 10% portion, which is rent out. The remaining portion we can capitalize later when it's originally completed.
Why? Oh, no, Saminathan. See, just read the question. It expects that commercial complex will completely rented out by 30th June 20x1. It has completed on 31st May. See, you are not able to rent out. That is secondary thing. But intent ready.
Intended use, ma'am, is have done on 31st May 2021.
Yes, that is there. It has completed on 31st May 2000x1. So it was ready for use by 31st May 2000x1. We were not able to give it on rent. It was not further used for whatever reasons, adverse market condition, which is not in our hand. But it doesn't say that because it is not in our hand, adverse market condition, so we can continue capitalizing the borrowing cost. No, because the asset is ready for its intended use by 31st May. So we have to stop capitalization by 31st May. That is, Sessation of Capitalization will be on 31st May. Is it clear?
Okay, ma'am. Now it is clear, ma'am.
Okay. Now we have a question in your tested knowledge part. This is question 1. Marine Transport Limited ordered 3 ships for its fleet on 1st April 20x0. It pays a down payment of 25% of the contract value of each of the ship out of long-term borrowings from a scheduled bank. The delivery has to commence from the financial year 20x7. On 1st March 20x2, the shipbuilder informs that it has commenced the production of 1 ship. There is no progress on other 2 ships. Marine Transport Limited prepares its financial statements on financial year basis. Is it permissible for Marine Transport Limited to capitalize any borrowing cost for the financial year ended 31st March 20x1 or 31st March 20x2? First, I want for 31st March 20x1. For 31st March 20x1, can we start capitalizing the borrowing cost on any of the ship?
No,
No, ma'am. Because that on 1st March 2022 only, the commencement started of 1 ship.
So the criteria of commencement of capitalization started from 1st March 20x2, and that too for only
1 ship.
So for 1 ship, we'll start capitalizing the borrowing cost, but that too from 1st March 20x2, not on 31st March 20x1. Though we have started incurring the borrowing cost. Okay, 3 criteria have to be meet, and simultaneously they have to meet. First was incurring the expenditure, second was activity to be started, and third was incurring of borrowing cost. Borrowing cost you have already started, but activity you have not started. That's why your commencement of borrowing cost will also not start. Okay.
Right, ma'am.
31st March 20x2, we'll start for 1 ship. We'll start for 1 ship. For other 2 ships, still the other criteria are not met. That's why we'll not be starting capitalization of borrowing cost. Okay. Dividends payable on shares classified as financial liabilities. I explained you any preference shares which is in the nature of financial liability. And when it is in the nature of financial liability, when it is a redeemable preference share, you have to redeem at any cost. Or when you have a preference share which is convertible but at the option of the holder. At the option of holder, if you are having any preferences which you have issued, then it is considered as financial liability. And when it is considered a financial liability, any interest cost on that will be used for capitalization of borrowing cost. But if it is a capital in nature, that preference share is irredeemable or preference shares are in the nature of capital, in that case, any dividend which you are paying on that will not be considered as borrowing cost. It will be considered as imputed or notional cost, and that imputed cost is out of the scope of Ind AS 23, which we studied earlier. Okay?
Okay.
Yeah. Somebody was asking something. Tell me.
Ma'am, dividend payable is imputed cost. We decided that it should not be included in the borrowing cost. Now, what is the difference on that, ma'am, opinion?
No, there's no difference. That is the simple repetition. Only when dividend is in the nature of finance cost, and when it is in the nature of finance cost, when it is that preference share is in the nature of liability, not capital. In that case, borrowing cost will be. In the second case, when preference share is in the nature of liability, at that time any dividend paid on that will be included in borrowing cost. But when preference share is in the nature of capital, at that time any dividend paid on that will not form part of borrowing cost, because it will be considered as imputed cost. Okay.
That means which are irredeemable preference shares.
In
No,
general,
which are
irredeemable preference shares are there, which is considered as in the nature of capital. But nowadays, generally, as per our Companies Act, we cannot issue any irredeemable preference shares. We have to issue preference shares which is in the nature of redeemable. And the maximum period, I believe, is given 20 years or 10 years. Maybe law has changed. I am not very updated with that, what is the maximum period, but I'm very sure now our Companies Act do not allow any preference shares to be issued in the nature of irredeemable. Okay.
Ma'am, I need one clarity on this. Ma'am, a company is going to build a building for which the fund is needed. For that, the equity share capital is issued for the purpose for the building building. So, is that the cost of the equity shares will be allowed as a borrowing cost?
No, because it is equity in nature. It is not in the nature of borrowing. It is not in the nature of liability. So that will not be used. We have studied in the beginning slides. We have studied that in the English. Any fund raised from equity shares. Equity shares is in the nature of capital. In that case, with dividend is used, and dividend is appropriation of charge, not the charge. It is not used as a charge in profit and loss. It is an appropriation of profit.
Against profit.
Okay, so that's why if you are raising fund through equity shares, in that case there will be no borrowing cost. If you are raising fund through the issue of debentures, through issue of bonds, through issue of preference shares, which is in the nature of redeemable, or which is in the nature of convertible at the option of the holder, then it becomes a liability, and any dividend paid on that will be considered, but not for equity shares. This we have studied in the entire earlier slides at the beginning. Okay.
Yes, ma'am. Suddenly is some doubt pop up.
I am ready to answer. That's what I was saying. Even the silliest one, something which comes to your mind, it is always welcome. And it is very necessary that you rebrush your whatever you have learned. Definitely in the first learning, you cannot recollect or remember everything. Na? You need to rebrush. It's okay, completely okay. Okay?
Thank you.
It may be appropriate to capitalize interest in group financials. Okay. Now we are talking about capitalizing borrowing cost in group financial statements. What happens that I'm a holding company. I have given a loan. I have incurred a loan. Sorry, I have taken a loan, but that loan is being utilized for construction of asset of a subsidiary. In that case, my loan, I have taken a loan. If I have taken a loan from a third party, in that case, in group financial statement, that borrowing cost will appear as a capitalization of borrowing cost, because that asset will be of a group, not of a subsidiary. Okay. Are you getting my point? If I'm taken a loan, I have taken a loan from third party. I'm a holding company, but that loan is being used by the subsidiary. Then in group financial statement, that loan, if used by subsidiary in the construction of asset, that asset appears in the group financial statement as an asset of one entity, group entity. So in that case, borrowing cost will be capitalized, even if it is taken, it is used for the third party. Sorry, by used by the subsidiary. However, if I have taken a loan that is not from the third party, say for I have taken a subsidiary, I'm a subsidiary, and I have taken a loan from holding company. Okay, I'm a subsidiary and I have taken a loan from my parent company, and parent company, I'm paying interest to that parent company. So when I'm constructing an asset and I'm preparing a separate financial statement or standalone financial statement, in that case, I'll be capitalizing the borrowing cost. But when it comes to group financial statement, consolidated financial statement, it will not be considered. Okay.
Okay, ma'am.
Okay, it's a mutual transaction which will be eliminated. There are differences. I'm just skipping that difference. I want one question. I want some MCQs to be taken because it's almost 10 o'clock. I want certain MCQs. I was not able to take in the form of quiz that other subject faculties are doing. I tried to do it, but still I want you to answer it. So I won't be displaying the answer until and unless, and I want everybody to give the answer in the chat box. Don't unmute yourself. Okay?
Okay.
I want everybody to understand, those who are there to be participative, so that I understand that everybody is clear with the concepts. First question. In case of specific, don't give the answer by unmuting yourself. Give it on the chat box. I'm not putting it on the chat box. We are having Dilip, Chitra, Akshay, Saminathan, Bibhu, Sanjay, and Saurabh. Okay. So I'm just closing this participant list and I'm opening my chat box. Sorry, Chitra, you were giving things on chat box. Maybe I missed it out. Okay. Okay. Your answers were correct. Now I'll see who is replying. In case of specific borrowings, the borrowing cost is capitalized for which amount? Okay. To the extent the borrowings are utilized for construction of the qualifying asset, to the extent of the expenditure incurred on construction of the qualifying asset, on total amount of specific borrowings from commencement date less income on temporary investment made out of such borrowings on behalf of the specific, on half of the specific borrowing amount. I want the answers on chat box. In case of specific borrowings, the borrowing cost is capitalized for which amount? To the extent of borrowings utilized, to the extent of expenditure incurred on total specific borrowings from commencement date.
See, on total amount of a
No, no,
specific
no.
borrowing.
Who is answering me? I don't want anybody to unmute. Please give it on chat box. Let others also to participate. Okay, Chitra gave answer option, gave her answer. Chitra has given the option. Others also I wanted. Okay, Sanjay has. Okay, Sanjay has also given. Dilip has given answer. Okay, Saurabh has given. Okay. Who Samyanathan has given. Okay. Akshay, sir. So those who have given me option A, why? I want them to unmute and say, Akshay, you unmute, and Dilip, you also gave me answer A. I want you to unmute and tell me why A.
Ma'am, if the commencement of capitalization does
Hmm.
not start, even if the specific borrowing is there for a qualifying asset, we cannot capitalize it.
But we are talking about when to capitalize. In case of specific, the borrowing cost is capitalized. For which amount? I'm talking about amount here, not about the date from when to be capitalized. I'm talking about at what amount. So for my what
So,
amount, answer is what? To the extent of borrowing, to the extent of expenditure, on total amount of specific borrowing, on a half of the specific borrowing amount. My question is regarding the amount. On what grounds you have given me option A? See, students, let me tell you, when we talk about specific borrowings, irrespective of commencement date, though we have mentioned in option C the commencement date also, but assuming that all three criteria are met, what I am talking about is that if I have a specific borrowing of say 20 lakh, which we discussed, same example which we have taken earlier also, I have a borrowing of 20 lakh, but I have incurred expenditure of only 5 lakh as given, to the extent of borrowings are utilized, I have utilized only 5 lakhs. Okay. To the extent expenditure incurred, I have utilized 5 lakh, it means my expenditure has incurred for 5 lakh only. On total amount of specific borrowings from commencement date, my total amount of borrowing was 20 lakh. On half of the borrowings, 10 lakh. Now tell me, on what amount we will capitalize? I have given an example with amount.
Okay, ma'am. It will capitalize on 20 lakh.
It will capitalize on 20 lakhs. So this MCQ was basically what we have explained with the help of example. If it comes in theory, you should understand to the extent of borrowing utilized, no. In case of specific borrowings, the question is in case of specific borrowing. And in case of specific borrowing, irrespective of what is utilized, irrespective of expenditure incurred, we have to calculate the borrowing cost on the entire borrowing amount. Date may be commencement date, but amount will be the entire amount. Okay. So correct option is option C.
C.
Okay. Now moving to the next question. Which of the following would be considered as borrowing cost to be capitalized? Which of the following would be considered as borrowing cost to be capitalized? Interest on working capital, interest on borrowing used for manufacturing inventories in large quantities on a repetitive basis, interest on borrowings utilized to acquire biological assets measured at fair value, dividend paid on redeemable preference shares used to fund the development of qualifying asset would be considered as borrowing cost. Option to be given on chat box. And just mention question number 2, so that I understand that this is a new answer given. Okay, Chitra has given the reply. Sanjay has given. Saminathan has given. Okay, Saurav, I'm waiting for your answer. Bibhu has given. Dilip has given. Akshay has given. Okay, I was waiting for Saurav's reply. Saurav has not given me the reply. Waiting for Saurav. When we were studying the scope of the standard, what is applicable and what is not applicable. Saurav, you have given me C, I guess. Na? Borrowings utilized to acquire biological assets which are measured at fair value. Any asset which is measured at fair value, we have given the example. If it is measured at fair value, there is no purpose of capitalizing the borrowing cost on that. Why? Because the net impact on profit and loss will be there. If I have a cost of 10 lakh, the fair value of that asset is 12 lakh. So 2 lakh is the gain on account of measurement at fair value, which will go to P&L. Now, if we capitalize 1 lakh as borrowing cost, so my cost will be 10 plus 1, 11 lakh. Again, I have to measure at fair value, but my gain will be 1 lakh. There will be no capitalization because we have capitalized it. No finance cost will go to P&L. So we'll have impact of 1 lakh in P&L. But if we do not capitalize, we'll have a gain of 2 lakhs and 1 lakh ka expense. So net figure will be 1 lakh. So ultimate impact on profit and loss will be same. So there is no purpose of capitalizing it, the borrowing cost, in case asset is measured at fair value, because we are talking about capitalization means it forms part of the cost, but asset is not measured at cost. Asset is measured at fair value. So in this case, this will not be considered as borrowing cost to be capitalized. This was an exception given. There were two exceptions given. One, asset measured at fair value, and another was when it is of repetitive nature. Okay. And interest on working capital, why it is not borrowing cost is not capitalized on working capital? I won't answer, but I'll give the name. I'll give the name and I'll ask the person why it will not be there. Akshay has not unmuted once now. So Akshay, you unmute and tell me why we will not consider interest on working capital for capitalization of borrowing cost.
Ma'am, working capital is a capital utilized for construction of any inventory or that asset which has been used for sale in the normal course of business. And for that, we cannot capitalize the borrowing cost.
Yeah, working capital, see, borrowings used for qualifying asset. Qualifying asset is basically assets where we have a future economic benefits. Working capitals are for our day-to-day operations. That's why any capital interest on that working capital will not be considered for capitalization purpose, because it is not generating any asset. Okay. Okay, so your correct answer is dividend paid on redeemable preference shares used to fund the development of qualifying asset. Very important is qualifying word should be there. Qualifying asset payee, you have to capitalize the borrowing cost. Okay, so your correct answer was option D. Moving to third question, answer with reference to third question. Okay, which of the following is not a qualifying asset? Financial asset, investment properties, intangible assets, bearer plant. Which of the following is not a qualifying asset? It's 10-5. I'm having 6 more questions to go, including this 7 questions. Total 9 MCQs are there. We'll try to move it fast. Which of the following is not a qualifying asset? Answer. Okay, Akshay has given 3A. Okay. Sanjay Haku has given the answer. Okay. Chitra has also given. Saminathan has also given. Who else are there? Dilip, waiting for you. Vibhu, I'm waiting for you. Dilip has given? No. Dilip and Vibhu, waiting for your reply. Okay. Vibhu is applying. Okay. Saurav has also given the reply. Good. Dilip has also given. Okay. Dilip and Vibhu, you have mentioned option D, bearer plant. I'm not talking about whether.
Sorry.
Sorry.
It's,
Yeah, tell me.
I think it's a biological plant, ma'am, not bearer plant.
No, biological is different thing. See, I'm talking about qualifying asset. Qualifying asset, what is the definition of qualifying asset? It takes substantial
time
to get it ready for its intended. Bearer plants also take substantial period of time to get ready for its use.
Yes, ma'am. Yes, ma'am.
Will be considered as qualifying asset. Financial assets, why they are called financial assets? Because they are ready, they can be easily converted into finance. Okay, that's why they are categorized under the category of financial assets. So they are ready. So what is not a qualifying asset? Here it will be financial asset. So correct answer.
Ma'am,
Yeah.
can you please explain bearer plants? What is bearer plants?
Bearer plants are the basically it forms part of PPE, property, plant and equipment. These are the plants which will bear fruits or bear any produce which will give you a return in the
like
form of
mango
return.
tree will be a bearer plant, no?
Mango tree will be a bearer plant, and mango tree will not grow in one day. It will take substantial time for its intended use. After 5 years, it will start giving the fruits, or it will after a substantial period of time it will start giving the fruits, not from the day one. So that's why it will be a qualifying asset. Tell me any question you have in your mind. Just let me know. Don't hesitate. Tell me. Dilip, you are having any doubt?
No, ma'am. I was a little bit confused about bearer plants. That's why I gave them.
Now it's
but the financial asset may be a qualifying assets.
How?
How we determine that it is ready to use or?
See, financial assets. See, basically, financial assets. There are few things. Let me just tell you. Financial assets. Why we are giving the term financial asset? Because it can be easily converted into monetary value. It has a monetary value and it is easily convertible. That's the criteria of financial asset. I'm not going with the financial instrument wala. Even if you go for financial instrument, also it won't take substantial period of time to construct. There's no construction or any PPE or any asset, qualifying asset, which takes substantial period of time will never come under the category of financial asset. If you go through the balance sheet also, you'll find all non-current assets as separate category. Non-current asset of financial asset, if you go through that, you will basically find what comes in that, any loans which you have given, which becomes your asset. Okay, they are not, because the intended use is what? They start giving you return immediately. As soon as you give the loan, financial asset is what? A loan given to anybody. Okay. So if you have given a loan to anybody, you start incurring interest on that. It does not take any substantial period of time for development or for intended use. Okay.
Yes, the financial asset is a asset try to receive the cash in the fixed amount of unit in the currency. So, yeah, so hence it is not applicable for the qualifying asset.
True. Okay. No? So correct answer here is your option A, financial asset. Any further doubt or can we move to next question?
Yes, ma'am.
Okay. Borrowing costs do not include interest expenses calculated using the effective interest rate method as described in Ind AS 109. Interest in respect of lease liabilities recognized in accordance with Ind AS 116 leases, exchange differences arising from foreign currency borrowings to the extent that they are regarded as an adjustment to interest cost. Interest expenses on own finance resources or interest notional expenses. Interest on notional expenses. It should be interest on notional expenses. Okay. Interest or notional expenses. So borrowing costs do not include interest expense calculated using the effective interest rate or lease liability or a respect of lease liability. Okay, got answer. Chitra replied. Okay. Okay. Nathan, I think you have replied for 4D, na? Instead of that you mentioned 1D. Okay.
I typed 4 only, but I don't know how it is coming on.
Okay, I got it that you are, I assumed it is 4.
Yeah, it is. I replied for 4 only, ma'am.
Okay. Saurabh is also saying for oneness. Same issue having? Saurabh is also having same issue?
But when I am typing it, say
Yes,
on the
ma'am. Same
second
issue.
second question also, when I am typing it, it's reply, shown as 1 only.
Chalo,
I
theek hai.
don't know,
I'll take
some
it as
technical error.
Don't worry, I'll take it as 4. Okay, so everybody has answered correctly. Interest expense on own finance resources will not form part of borrowing cost. Okay, good. So we are moving to next question. What will be the treatment of exchange difference? So I missed somebody's answer. Acha. What will be the treatment of exchange difference resulting into unrealized gain? This portion I was not able to solve because of that pen issue. Na? So do you want me to answer that or should I just skip this question? What will be the treatment of
Yes, if you
exchange?
could please
Yeah.
make us understand. Yeah, if you could please make us understand.
Okay, I'll do that. What will be the treatment of exchange difference resulting into unrealized gain while capitalizing the borrowing cost on foreign currency borrowings taken for construction of a qualifying asset? It would not be adjusted to interest even if there was an adjustment to interest in the previous year on account of unrealized exchange loss on settlement or translation of same borrowings. Let me just give all the 4 options and then I'll. It would be adjusted to interest to the extent of an adjustment to interest in the previous year on account of unrealized exchange loss on settlement or translation of same borrowings. It will be adjusted to interest irrespective of the fact that whether there was an adjustment to interest in the previous year on account of unrealized exchange loss on settlement or translation of same borrowings or not. It will be adjusted to interest fully only if there was an adjustment to interest in the previous year on account of unrealized exchange loss on settlement or translation of same borrowings. I'm not asking answer for this. I'm just trying to give the explanation for this. What will be the treatment of exchange difference resulting into unrealized gain? First, we are talking about exchange difference treatment on unrealized gain while capitalizing the borrowing cost on foreign currency borrowing taken for construction of a qualifying asset. First of all, we have to understand what is unrealized gain. Any foreign exchange gain or loss is considered as unrealized until and unless that asset or liability is not settled. Okay. So here it is an unrealized gain and resulting into gain. It is not resulting into exchange loss. It is resulting into gain. While capitalizing the borrowing cost. Suppose in the first year you borrowed a foreign currency loan for say 1,000, which was given in the earlier slide also, and the exchange rate was 40. At the year end, it became 50. there was an exchange loss. But next year, when again we measured on the reporting date, we found exchange rate to be only 44. So in that case, from 50 to 44, it was reduced. Reduced means there was a gain. And when there was an exchange gain, there was no loss, there was no appropriation of loss into capitalization of borrowing cost or into P&L, as we discussed in the first slide. So in that case, whatever gain is there, whether we are readjusting that gain from the borrowing cost which was earlier capitalized, we have to take it out. Can we readjust the entire amount? Can we readjust to a particular extent, or we cannot readjust at all? What is the scenario that is being asked in this question? So in this situation, whenever in the first year there was exchange loss, because of that you distributed that exchange loss partly into capitalization of borrowing costs and partly which is to be recognized or charged to P&L. In that case, to the extent you have recognized in borrowing cost, to that extent you can reverse it. You can reverse it means you can adjust it. Why? Why you are reversing it? Because there is now a gain, exchange gain. Okay? Only to that extent you can do it, not beyond that. However, if your borrowing cost in the earlier year was say 5,000, but this time your exchange gain is only say 1,000, then you can do the entire amount. Okay? Means the higher limit is 5,000. Beyond that, you cannot readjust it. But to the extent of your gain, if it is more than or if it is less than or equal to the borrowing cost previously recognized from the exchange loss, to that portion you can reverse it. And here for reversal, it is mentioned as adjusted. Am I clear to everybody?
Yes.
The concept is clear now? Now tell me the answer.
Yes, ma'am.
Tell me the answer then. Okay. Good. Good. Chitra. Good. Now I believe everybody is giving me the correct option. Correct option is B. It should be adjusted to interest to the extent of an adjustment to interest in the previous year on account of unrealized gain loss and settlement or translation of same borrowing. Next question. We have three more. 6, 7, 8, 9. Capitalization rate is, what is capitalization rate? The weighted average of the borrowing cost applicable to all the general borrowings of the entity. The weighted average of the borrowing cost applicable to all the general and specific borrowings. The weighted average of the borrowing cost applicable to all the specific borrowings. The weighted average of the borrowing cost applicable to those general borrowings of the entity only that are used during the period for construction of that particular qualifying asset. But we'll try to be quick so that we move on and I don't take much of your time. This is question 6. So Sanjay, for question 5 you are correct. No, Saminathan, you have mentioned question 5 but not the correct option. Not the option. No option has been mentioned. Just redo, type it. Tricky question. I'm finding it as a tricky question based on your reply. Question 6. Chalo, most of the people have given me a wrong answer. See, when they are more than general one borrowings, the only word which is to be taken care of in this all the option was few words, which is to be not only word, few word was first thing was general borrowing.
Specific borrowing.
Yeah, something. Anybody was asking something?
Slightly confusion in option A and D.
There was a catch. See, For first, where there is a confusion was we'll elimination wala na, rule out wala, we'll use the fundamental. So funda is that first is general, or definitely for capitalization rate, we don't need specific borrowing. Okay. So this is out again because we don't need specific borrowing. Specific borrowing, we don't, capitalization rate is used only for general borrowing. So option B and C is out of the question answer box. Between A and D, only those borrowings or all the borrowings. There is an amendment. Earlier, it was mentioned in the standard only the borrowings which are utilized. Later on, the change they have amended in this. In fact, they have amended IAS 623, which way back, I believe almost 7 to 8 years back, they included this word all. Because once it becomes general borrowing, it becomes a bucket. It is not identified somewhere ki, as I told you, explained you, if you are using, say you are incurring expenditure of 5 lakh rupees and you have different borrowings where outstanding balance CC ka 10,000 is left over, you have outstanding balance of say 20,000 for 1 lakh, for some you're having 1,50,000, you're not able to identify which borrowing amount you are utilizing it, which general borrowing amount you are utilizing it for this particular qualifying asset. In that case, it becomes a very tedious, and sometimes there's no consistency also, and error is also caused. Sometimes entity used to use it for their benefit. Ki how just may maximum borrowing cost is coming, that they use those general borrowings and they used to capitalize more on borrowing cost and they put less burden on P&L. So what the standard setters do was that they amended the standard and they made it all general borrowings. The weighted average of the borrowing cost applicable to all the general borrowings, that will be considered, and based on that capitalization rate will be used. So this is a catch. It will be all general borrowings. So your answer will be all general borrowings. They are not earmarked that only these 4-5 general borrowings will be considered. In case entity is having 10 general borrowings, though they are utilizing only 3 general borrowings for a qualifying asset, still when you are calculating the capitalization rate, you have to consider all the general borrowings outstanding at that particular date. Okay, clear? Everybody clear? So most of the students have given me answer D, but it will be now A, all general borrowings.
Yes, sir. Got it now, ma'am.
Okay, moving to the next question.
Okay, got it. Yeah.
When will the specific borrowings be considered as general borrowing? Simple question. When substantially all the activities necessary to prepare the qualifying asset for intended use or sale are complete, when the necessary activities have been started. Difference, I'm just speaking out the same sentence with complete, have started. When substantial all activities are near to complete, specific lines are never considered as general borrowings. So option, I want to be quick for this question because this is a simple question. Okay, Bibhu has replied, Bibhu and Sanjay, two have replied option C. See, when I'm talking saying substantially, it apne aap it is there ki it is not at all activities near to be completed. When substantially, it means most of the activities are completed. So in that case, substantially bhi chahiye, and then here you want near to complete. No. When it is completed for intended use. From the beginning of this class, we were talking about when the asset, qualifying asset, is an asset which takes substantial period of time to complete for its intended use. So it will be to complete, not near to complete. Okay?
Yes, sir.
So correct option will be your option A. Next MCQ, in determining the borrowing cost to be capitalized, the amount of expenditure on a qualifying asset include only those expenditures that have resulted in payment of cash, transfer of other assets, assumption of interest-bearing liabilities, all of the above. Last time when I took this question, most of the students replied me wrongly. Good. This time most of the students have replied me correctly. Very good. All of the above. Here I am talking about expenditure and not the amount of borrowing cost. So expenditure includes payment of cash, transfer of other assets, and assumption of interest. All is included. Therefore, your answer will be all of the above. Best appropriate answer. Last MCQ of the day. In determining the borrowing cost to be capitalized, the amount of expenditure on a qualifying assets are not reduced by progress payments received, grants received in connection with the asset, income on temporary investment of specific borrowings. Oh, sorry. Sorry. Yes. There are only 3 options this time.
You already shared the answer.
Yes, ma'am.
I thought in case you have not checked it out.
It's a D.
Chalo, koi baat nahi. Okay. In determining the borrowing cost to be capitalized, the amount of expenditure on qualifying assets are not reduced by progress payments. Why? Because progress payments and grants received are used to reduce the expenditure. Okay. And here we are saying while income on temporary investments are used to reduce the borrowing cost. So I'm talking about expenditure and not the borrowing cost. So what is not used is temporary income on investment. You understand the reason, na?
Yes, ma'am.
We are talking about expenditure. For expenditure, this is used. This is not used. Why this is not used? Because this is used for borrowing cost, for interest reduction. Okay. Okay, with this, students, we have completed today's session. I hope you understood Ind AS 23. And in case you have any doubt, you please let me know. We can bring an extra class and we try to cover it. So I wanted to cover one more question. This was a very good question which came in the examination of your not in your this financial reporting examination, but it came in your general financial reporting standard, which was in the earlier scheme. That question came and it was a really very good question. I added in your RTP also, later in your study material also, and I wanted that to cover. When you started your construction activity on qualifying asset, there was no borrowing, and later you had a borrowing, general borrowing, and in that case, what should be the accounting treatment? One concept which I missed to explain, which was related to that question, is that suppose your qualifying asset is taking substantial period of time, which is running for more than a year, say for 3 years. In that case, year one, just a minute. Let me just explain. I missed that explanation. I want that to cover it. Year one, you had cost of the asset plus borrowing cost. Okay. For year two, cost will be, this is the closing value. This closing value will become the cost of the year two plus borrowing cost. Okay. Closing value of year two will become the opening cost of year three. Okay. Am I clear with that? What I wanted to state here is that borrowing cost of previous year, since it is capitalized, it becomes cost of the asset. So next year when you are computing borrowing cost, you will compute the borrowing cost on this figure. And this figure includes
Okay.
cost of previous
Yes,
year.
ma'am.
Okay. So what I wanted to explain is that borrowing cost of previous year becomes the cost. On that cost, you have to calculate the next borrowing cost.
Yes, interest also.
Interest ka concept which we study, na, that will follow here somewhere indirectly or indirectly, that borrowing cost becomes a cost, and because it becomes a cost, when you are calculating the borrowing cost of next year, you indirectly calculate the cost on borrowing cost also, or you calculate borrowing cost on previous borrowing cost also. Okay. So there's a question in your study material I wanted to cover, and also that foreign exchange loss wala. In case you wish, I can take one extra class, but during my office hours. I won't be. If you want, those students, those who have joined today, they all are aware that we have an open house session on Monday from 4 to 5. If possible for you all, you can join that open house session. For that 1 hour, I will be able to complete that question. We'll use that foreign currency wala concept we'll discuss, and also one question which I wanted from examination perspective, I feel that is important. I'll try to explain that. 1 hour is there. I want everybody, those who are there today, they can join me on that day. Is it okay for them? Please just unmute yourself and tell you'll be able to join that.
Yes,
Yes,
okay.
ma'am. Yes, ma'am. We'll join, ma'am. Ma'am, I have one query on this. The cost plus borrowing cost, when it's like a compounding. Then,
Yeah.
if the interest is paid, then we will not consider that.
Interest is paid or borrowing is repaid. When
Yes,
borrowing is repaid, nahi beta, but we have to, in this is the case in case of general borrowing. In case of general borrowing only, na, we consider expenditure.
okay.
So in this, what I am explaining you is in the case of general borrowing, because there we use expenditure and we calculate borrowing cost on expenditure. In case of specific borrowing, we don't consider expenditure. We consider the amount of borrowing. है ना? So in case of general borrowing, what is the expenditure? The cost you have incurred till date. It is not that in the current year what you are incurring. If you have incurred any expenditure in the previous year, that will also be considered for computation of, that will also be considered as expenditure for computation of borrowing cost or for computation of using capitalization rate.
Okay, ma'am. Right, ma'am. Anyway, we will be discussing on Monday. We will have that.
We'll do that. 4 to 5, my open house session. This is a fixed session. Every Monday I have on from 4 to 5. So students, those who have joined today, in case you have any doubt, you can ask me on during my open house session from 4 to 5. Every week I'm available. Okay, and students, one more request. Please give your feedback. Feedback form, it is not that for today's session I'm asking because I have taken the class. For every class, for other faculty, for Alok sir also, for your recently now you'll be having in this month you'll be having one class for Aditya Kulkarni also, and later you'll be having Kapileshwar Bhalla sir also for your financial instrument and consolidation. Please fill the feedback forms topic wise, or if possible day wise also. That will really help us in understanding which topic, for which topic you feel which teacher is the best and you want them to take the classes, and also how to improve. If you have any expectations, any suggestions, please give us to that. We are there to improve. We are there to cater you. And if we understand your requirements, then we'll be able to cater you in a better manner. Okay. So the feedback.
Right, ma'am. Okay, ma'am. Right, ma'am. Like you discussed today, you solved the type more illustration. The same way, if it is for other standard as well, it will be good, ma'am.
So I believe Alok right now till in this new batch, Alok sir is taking all the classes has been taken by Alok sir, and Alok sir is taking the illustrations, I believe.
Yes, ma'am. Ma'am, the Alok Gaur sir is giving the illustration on his own as well as the study material. He is covering everything. The same way I wanted to continue. So you have also covered the same way. We want more illustration like that as much as possible.
Okay, okay. So I'll just ensure this and other faculties who will be taking FR classes, they also cover maximum of questions. I'll do that. I'll ensure that. Thanks for bringing this to our mother. I'll take care of this suggestion and I'll ensure that it is being done. At least 80% of the questions are covered, and 20% similar kind of questions they can give you as an homework. Okay, that is okay, na? Because entire class cannot be because we have good number of question bank in our FR study material. That is the reason it is running into 5 modules. So
Yes, ma'am. Yes, ma'am. So far, so good, ma'am. Definitely, I am appreciating from my heart that yourself and Alok sir, they given the n number of examples on own example, as well as Alok sir covered in that study material. Most of the illustration he covered actually.
good.
Thank you so much.
Good, na? Good. And for my session, I understand that I have left few questions because of paucity of time, but I'll cover it in this open house session. Huh? So those students who have left before my announcing that I can cover it on Monday. So tomorrow or Monday when they have AFM class and those students join, or on WhatsApp group we'll do it. On WhatsApp group also we'll mention that we are taking open house session for the remaining questions which we were not able to cover today. So I hope everybody is there in the WhatsApp group. Everybody.
No, ma'am. No, ma'am. I am not not in WhatsApp group.
Dilip, you're not there in the WhatsApp group. We will give you the link on the chat box. We'll just give you an invite link. Ashokji? Ashokji, please give the invite link on the chat box. And Dilip, you join through this link to the WhatsApp group.
Sure, ma'am.
And one more thing I just want to announce is that the open house session which we are going to happen on which we are going to take on Monday, this open house session is a live session. We do not have any recording. So in case students, those who are not able to join, don't search on YouTube or on that our portal, BOS portal, for those recorded session. We don't have any recorded session of open house session. Okay. All have to be there.
Which question are you going to discuss? Can you mention?
Yeah, definitely. But foreign currency wala, which we missed out because of certain technical glitch. One question is that. One question which I was mentioning. I'll just give the question number to you. I'll be covering question number 6 here. One question of I'll be covering from RTP. There'll be a question. I'm not able to find that question in the study material. I don't know why I missed it. That is a question RTP. Most probably it is from your 2022 or 23 wala RTP. I'll put it in the WhatsApp box. I'll give the person who is coordinating for that WhatsApp group now. I'll give the message to him. I'll identify the exact RTP number and the question number, and that we can discuss it over there. Okay?
Okay.
Because it is from the RTP, and that is good question, important question. I'll be also covering foreign currency exchange and question number 6 of your tester knowledge question.
Okay, ma'am. Thank you.
Okay, everybody. Thank you, everyone, and please do fill the feedback form, and whatever genuine feedback you have. We are not expecting to just exaggerate anything. The link has been given on the chat box. So Dilip, chat box, we have given the link. You can join the WhatsApp group through this link. Okay, everybody. Okay, bye, everybody. Bye.
Okay, thank you, ma'am. Have a wonderful day.
And thanks to everyone for being patient. I have taken extra half an hour, 40 minutes in fact, and you were patient for that technical glitch in between, and also for this delayed extended session, not delayed.
This is for our good only.
Yes, ma'am. You have fed it extra to us. Thank you so much for that.
Okay, thank you everyone. Okay, bye.
Bye.
अशोक जी बंद कर दीजिए. हाँ जी.